to see you at home, Senator Moore.
I may have a cat join me from time to time. She's very needy this morning.
It would be in keeping with our HHS tradition. So
There you go.
Mine's right here too, Senator, so.
and usually Representative Meyer has her dogs handy because they have separation anxiety. Good morning, everybody, and welcome to this morning's session on Health and Human Services. We're gathered today for a work session on a couple of bills that are very important and need adequate hearing, and to which there are attached a number of questions. Before we get started with introductions, I'm supposed to read a statement that says, let's all play nice in the sandbox and respect each other. I think we have done a great job so far, and I'm not feeling constrained to read that, or I appreciate how we conduct business in our committee, and I don't feel like we need to do anything beyond that. So thank you all for that. And also I want to acknowledge that Sam has put in a tremendous amount of work putting together this morning's agenda, and I want to publicly thank him for that as we get started. So thank you, Sam. Good work. So let's introduce ourselves and start with Representative Lemelin.
Good morning, everyone. My name is Michael Lemlin. I represent House District 88, Chelsea, Jefferson, Whitefield, and half of Nobleboro.
Representative Perry.
Oh, good morning. I'm Representative Van Perry. I represent House District 140, which includes the communities of Indian Township, Baileyville, Bering, Calais, Charlotte, Robbinston, Perry, Pembroke, and Pleasant Point.
Representative Connor.
Thank you, Mr. Chair, and good morning, everyone. My name is John Connor, and I represent part of Lewiston.
Representative Griffin.
Good morning, everyone. My name is Abigail Griffin. I represent House District 102, which is Glenburn, Levant, and Cadesco.
Representative Craven.
Thank you, Mr. Chair. Good morning. I'm Margaret Craven, and I represent House District 59, which is part of Lewiston.
Representative Madigan.
Thank you, Mr. Chair. I'm Colleen Madigan. I represent House District 110, which is part of Waterville and part of Oakland.
Senator Moore.
Good morning. I'm Marianne Moore, and I represent Senate District 6, which is all of Washington County, as well as Goldsboro, Winter Harbor, and Sullivan in Hancock County as well.
Representative Meyer.
Good morning, Mr. Chair and committee members. I'm Representative Michelle Meyer, serving Southern Maine's House District 2, which is Elliott and parts of Kittery and South Berwick.
And I'm Ned Claxton, honored to represent the folks in Senate District 20, which consists of Minot, Auburn, Mechanic Falls, Poland, and New Gloucester. We are missing a number of our committee members who are attending to other business and are likely to, some of whom are likely to join us later, and we'll make sure we get a chance to introduce them then, but all have significant obligations. Our committee work is made possible by our staff, so I'll leave Sam to introduce himself.
Sam Seneff with the Nonpartisan Office of Policy and Legal Analysis.
And Karen.
Thank you, Senator. I'm Karen Thomas. I'm the clerk for the Health and Human Services Committee. Please email me if you need assistance at hhs@legislature.maine.gov. Thank you.
Very good. And unless there's anything else that Sam wants to do before we get started, I'm going to turn it over to you, sir.
Thank you. And I would just, Senator, we do have another nonpartisan staff member with us, Luke Lazor.
Oh, I did. I'm sorry. That's right. I was busy chatting with Luke earlier. Luke, do you want to introduce yourself?
Sure. So my name is Luke Lazor, and I do all the work for the Health and Human Services Committee over in the Office of Fiscal and Program Review.
Very good. He's our financial guru. All right. You're up, Sam.
So today, this is going to be the first work session for two bills. Those are LDs 1523 and 1693. And those bills both seek to create a new structure for the management of the Funds for Healthy Maine. And we wanted to spend some time today having some experts speak as to how the structure proposed by those bills might work, and kind of the first steps to understanding how that structure might play out is to understand how the funds for Healthy Maine are currently managed, as well as how another structure that is similar in some ways to what is proposed by these bills, different in other ways, and that is the Efficiency Maine Trust works. So we have folks who are from that entity and who do some of the fiscal work with that entity here to talk about that, to give you some kind of a baseline for understanding these bills. They're complex bills, they're long bills. So today we'll be spent hearing from those experts and asking questions of those experts. And then at the next work session, we'll do kind of our typical, I do my bill analysis, there's discussion and voting. So a little bit of a different approach today, but that is just because, again, these bills are dense, and there's a lot to understand. So the agenda today, we'll be hearing first from Attorney General Fry, and then you'll be hearing from Doug Hotner, he's the state controller, and then from Henry Beck, he is the state treasurer, and from Mike Stoddard, he is the director of the Efficiency Maine Trust. Mike Russo from OFPR, Luke's colleague, will be talking about the financial aspects of the Efficiency Maine Trust. And then Luke is going to talk in some detail about the way that the Fund for Healthy Maine works and what the effects of the two LDs that we are speaking about today would be. And we also have here AAG Reardon, who manages much of the work around the legal aspects of the Fund for Healthy Maine. She is here for any questions and to support Attorney General Fry. So that is my introduction, and I think we can start with the presentations.
So welcome, Attorney General Fry. We're trying to bring in your colleague who's headed this way, but we appreciate you taking time to be here with us.
Well, good morning, Senator, Representative, members of the committee. Thank you for your time this morning. I think probably my comments will be more brief than some of the others. I hope they will be helpful. I do want to just highlight too, being joined by AAG Elizabeth Reardon. She really is a subject matter expert on the master settlement agreement and the obligations that the state has with respect to the tobacco settlement that was secured back in the late 90s. She's a resource that I hope you've benefited from and will continue to benefit from as you have these discussions. So again, my name is Aaron Fry. I do serve as Maine's Attorney General, and I appreciate the opportunity to focus today, I think, on some legal questions that may be on some of your minds, and we'll certainly be happy to answer questions after I give a brief remarks. So I understand that our office is involved here today or would benefit the committee today because of a few different things. First, this office was responsible for reaching the settlement along with other state and territory AGs back in the late 90s, securing the resource that we're talking about when we're dealing with the Fund for Healthy Maine. This office, since that settlement, has also been responsible for ensuring that Maine is in compliance with the terms that were established for Maine to abide by in order to ensure that we receive the maximum amount of settlement dollars, because the more compliant we are with the terms, the more able we are to receive the maximum payout that is available under the settlement to the state on an annual basis. And Maine has been very successful in that effort, by the way, of complying with those terms. And then third, and perhaps importantly for this discussion, this office has had some history on commenting on different proposals that may be put forward on how to address the spend of the dollars that come in through this tobacco settlement. In particular, back in 2003, there was an Attorney General opinion from then Attorney General G. Stephen Rowe that commented on the idea of how the legislature might be able to address how these dollars are spent. And then, of course, over the last two sessions, in the 129th and now in the 130th, there's been discussion about how the structure may be realigned, recalibrated to provide a different level of priority as to how these settlement funds are directed, a greater level of protection as to how these dollars are directed. So this office has been involved in these questions about what might be an appropriate way or an inappropriate way to restrict these funds, to direct these funds. And certainly in the last legislative session and the 129th, there were some questions about the constitutionality of the proposal at that time. And in particular, there were concerns about whether or not it would lead to the legislature or members of the legislature exercising the executive power. So there was a separation of powers concern. There were also questions raised about whether or not the 129th legislature could operate to bind a future legislature. In other words, legislate in such a way that would prevent a future legislature from being able to exercise its legislative power. And so those questions came up. There was extensive memorandum or extensive advice that I believe was provided by OPLA, by my office at that time. We have had the opportunity. So Elizabeth, Chris Taub was the chief deputy here in the office, used to be one of the primary attorneys responsible for the master settlement agreement. Myself, we've looked at the current proposals, and it would appear as though all of the concerns that may have attached, the constitutional concerns that may have attached to the proposal on the 129th have been addressed with the proposals that are before the committee now. In that it appears as though the issue around legislators exercising the executive power, that's been resolved. I think there is now an understanding that the 130th legislature has no more and no less power than the 119th legislature that originally set up the framework for the Fund for Healthy Maine. It doesn't have any more, any less power than future legislatures who may weigh in on this question. I believe everybody understands that these proposals are really geared at setting up a different way, a different priority, a different structure to administering these funds, recognizing that it can't bind the 131st, the 132nd, et cetera, from being able to make a different policy decision about how these funds should be spent. So that's a long way of describing. It would appear that the issues that were identified in the 129th, the constitutional issues, have been resolved, and there is an understanding that the 130th can make some decisions about what to do with this money, cannot bind a future legislature in what it might do. So I would just conclude with, as somebody who is responsible for making sure that the master settlement agreement terms are reached. As somebody who served in the legislature, had an opportunity to learn about the good work that the dollars for the Fund for Healthy Maine certainly support the policy objective of ensuring that these settlement dollars are maximized and being directed to the health promotion purposes identified by statute and 22 MRS 1511. But of course, that policy decision about how to spend that money is with the legislature, and I don't have anything to offer on that policy decision about what would be best and what might not be best. I hope that information is helpful. Certainly, Elizabeth and I are prepared to address questions that the committee may have. Thank you.
Thank you, Mr. Attorney General. Are there questions of the Attorney General or Elizabeth Reardon? Could somebody speak a little bit more extensively to the issue of the question about executive and legislative separation with legislators on the steering committee, council, board for the trust?
I'll tee it up, and then I'm going to phone it. I'm going to ask Elizabeth to make sure she cleans up what I might not hit upon. The issue that came up in the 129th was that it would have allowed the legislature to appoint members to an executive, basically an executive function, an executive agency. And that, the legislative branch is not able to exercise the powers of the executive branch. And so by legislatures saying, okay, we are going to tell the executive how to do its work here, that was one of those issues between that was identified between the group branches. Secondly, the extent to which the legislature was able to appoint people who would then be exercising the executive function of the spend of the money. Once the money is appropriated, allocated, by the legislature having that authority to also exercise the executive function of the spending, that was also a concern around the separation of powers issue. AAG Reardon, am I hitting those key concerns that were raised in the 129th that have been ameliorated with these new proposals?
That's exactly right, unsurprisingly.
So those were the good way to start a Friday right there. Those were the key concerns, and I think that was heard. I'm making an assumption here. I believe that was heard by the sponsors of these proposals and was addressed so that separation of powers concern would not be an issue here.
Thank you for that. And I also had a question of Elizabeth Reardon. Does having the setting up a trust make compliance with the master settlement agreement any more complicated or put any dollars at risk?
No. The simple answer is no. The compliance has very little to do with what happens with the money once it gets to the state.
Okay. Well, that's reassuring. Thank you.
Yeah.
Representative Meyer.
Thank you, Mr. Chair. And thank you, Office of the Attorney General, for being here today. So I'm just going to read from a previous analysis and just ask for your comment on this. So under all constitutional governments recognizing three distinct and independent I don't even know how to pronounce that word because I'm not an attorney. The control of the purse strings of government is a legislative function. Indeed, it is the supreme legislative prerogative, indispensable to the independence and integrity of the legislature, and not to be surrendered or abridged, save by the Constitution itself, without disturbing the balance of the system and endangering the liberties of the people, the right of the legislature to control the public treasury, to determine the sources from which all public revenues shall be derived and the objects upon which they will be expended, to dictate the time, the manner, and the means, both of their collection and disbursement, is firmly established in our political system. So I guess my question is around the role of the legislature and how this would impact that constitutionally described role.
I'm going to offer some comments, and then I'm going to encourage Elizabeth to jump in if I maybe don't cover something that we've talked about in the office. So maybe the most straightforward way that I can describe it is the way this settlement works is it directs settlement dollars into the general fund. And it's at that place where, as you've just described, Representative, the authority of the legislature is complete in how it then decides to direct those resources. Just like the 119th legislature made a determination that and passed a statute that said, we're going to establish a fund for healthy Maine. These are the purposes by which we are going to spend this money. The legislature, that 119th legislature was acting to spend that money. Subsequently, the legislature has acted from time to time to amend that statute, to not withstand that statute, redirecting how those resources are spent. So those have been different examples of where the legislature has that complete ability to make a decision about how to spend those resources that are that have hit the general fund. And so similar to what these proposals are, right? These proposals are the 130th legislature making a determination about how to spend this money. And that determination might be, let's keep it as it is. That determination might be, let's adopt the proposal that has been put before us. What I hope that is responsive to is the idea that because the resource is within the control of the legislature to spend, to direct that spend, just like the 119th legislature made a determination to establish a statutory framework to spend those settlement dollars back in 1999, subsequent legislatures have made other decisions that they have completely been able to make about how to spend or not spend those resources. And again, that's how I would tee up these proposals. Appear to be, asking the legislature to again make a determination about what the best way is to spend those resources. I hope that's responsive to that question about the legislature's ability to make decisions about how to spend money without being restricted by prior legislatures, because again, that constitutional power really can only be limited by not getting the money or by some other constitutional direction that would limit in some way the authority of the legislature, which I can't even really conceive what that would look like. But I mean, that hopefully that is responsive to your question.
All set, Representative? Very good. Are there any other questions of the Attorney General or the Assistant Attorney General? Then I will again thank you both for being here, taking time out of your day, and for the AAG's expertise in helping make sure that the AG got it right. So thank you both for being here.
Thank you.
I will remain on if you have any further questions later.
Okay, great. Thank you. All right, Sam. So next we're going to hear from Doug Cottonor. So we'll bring him in. Welcome, Mr. Cottonor. Thank you for being able to join us.
Good morning. Sorry for the delay, waiting for my computer to give me the opportunity to let you see my shining face this morning and to actually hear my voice. As introduced, I am Doug Cottonor. I'm the State Controller. I have served in this role since effectively since about 2012, having been with state government since January of 1984, if that's believable or not. I did meet with this committee 2 years ago, just pre-pandemic, to talk about the prior legislation. And hopefully I can do some service this morning in explaining some of the questions that had been posed to me. Starting off with the first question about how the fund transfers work, I want to start with a little bit of background first, because this legislation defines this as the trust fund for a healthy Maine, changes the structure somewhat. I want to just provide a quick background on the definition of trusts and how there are two different bodies of governance that I have to look at. One is there are the statutory definitions that are included in this legislation. And then there are the Governmental Accounting Standards Board, or GASB as we refer to them. They are the rules promulgating body that tells me as a CPA and as the controller for the state how we have to report certain dollars in our annual comprehensive financial report. So the use, control, and purpose of the funds in the Fund for Healthy Maine do not meet the criteria as a fiduciary activity under the GASB rules. So in those rules, they would not constitute a trust and therefore would not be reflected as a trust in the state's comprehensive annual financial report. That being said, the state can account for the funds any way it chooses to, whether it's a trust fund, another special revenue fund, in the general fund, or otherwise. Just when I get to the end of the fiscal year and I have to prepare the annual comprehensive financial report, these dollars would not be reflected as a fiduciary activity based on the standards set by GASB. The reason for that primarily is the tobacco settlement revenue and related receivables would continue to maintain their identity as they do today. The original master services agreement was determined by the courts. There is a requirement to pay participating states based on the number of cigarettes sold in the state. Ultimately, the state's the recipient of those funds, not the trust fund, under the agreement. Therefore, it's really kind of inconsequential where we ultimately intend to use those funds in terms of determining whether it's a fiduciary activity. So we can't change the underlying character of the underlying funding stream. However, you can manifest your intent for how it's going to be handled budgetarily and certainly dictate how the funds are to be expended, dispersed, or otherwise utilized. The trust, in this case, the trust would continue to be reported in the financial report as part of the special revenue fund. Now, I'll give you another little piece of technical background. This legislation is establishing a separate body, corporate and politic, what we would refer to as a component unit of the state. Again, under separate GASB standards, there are requirements for how we reflect component units within the state's financial report. This particular entity, because the relationship with the state, how the board is comprised, the fiscal relationship to the state, that is the financial benefit burden relationship, or what's referred to as fiscal dependency. The predominant funding source is from the state's tobacco settlement. The ultimate resolution, if there's ever a dissolution of this board, is to return the residual balance to the state. Those items, from my evaluation, and we would look into it more deeply upon passage, would be that this would be considered a blended component unit, meaning we would treat it in the financial report the same as we would a state entity. Therefore, it would be reflected as an other special revenue fund in our financial report. Again, doesn't speak to how we can account for the funds, but ultimately in the financial report, that's the way it would be reflected. It's very similar to the Maine Government Facilities Authority in nature. MGFA is a separate entity entirely. They have a separate financial report. They have a separate audit. We take the results of that information and quote unquote blend it into our financial report, so it looks as though it's a special revenue fund of the state. And that's disclosed and explained throughout the report. This is very similar in that regard. So at this point, I would move to answer the question how the fund transfers work. But Senator, if there are folks that have questions about what I just spoke about first, I'm happy to entertain questions if that's what you would like.
Thank you, sir. Are there any questions to the committee to this point? I'm not seeing any, so why don't you proceed?
Okay. So how the funds would be transferred. The tobacco settlement funds currently flow through the state's books initially according to the law. Under this legislation, they would then be transferred to the Trust for a Healthy Maine. As I read the proposed language, it appears they may remain on the state's books initially, but may be transferred off books for specified purposes. So the trust fund, the board would have the authority to carry out its duties. If the spending plan involved a non-state entity, funds would be transferred off books to those entities. If the spending plan involves a state entity, for example, Department of Education or the Department of Health and Human Services, those funds would be transferred from the trust to those specific programs through a budgetary action similar to what we do today. Again, the example being this DHHS smoking cessation and prevention programs. In a trust fund, in terms of how revenues and expenditures are tracked by the state in the accounting system today, if we treat this fund as a trust fund in the accounting system, there are no operating statement accounts like revenues or expenditures. The way trust funds work, there's simply increases to assets and decreases to assets, meaning we bring cash in, we pay cash out. There's no what we refer to as nominal accounts or what you would recognize as revenue or expenditure accounts in the budget. So from that perspective, in accounting for them as a trust, we would lose transparency and accountability around the source of the revenues and the purposes of the expenditures. The only visibility really would be at the transactional level, meaning my office, Luke's office, others could, internal users that have access to our financial accounting system could see the individual transactions to identify and understand their purpose, but there would not be any clear summary level information as there are today with revenues and expenditures to say on any given day, we've collected X number of dollars of revenue and we've dispersed X number of dollars in expenditures. We would have to, in fact, look at each individual transaction and perform that analysis. If the funding is used for a state administered purpose, again, the example being DOE or DHHS, we would see that accounting, but not in the trust. We'd see that accounting in the program accounts that DHHS and Department of Education use. So in their other special revenue fund accounts, you'd see the money coming in from the Trust for a Healthy Maine, and you'd see a summary of where that money has been expended on a regular monthly cadence, the same as we do with any of the other accounting system reports. Within the trust fund itself, however, those are handled at the balance sheet level. So again, there's no revenue or expense to be visible. Because of that, they would not be extracted to public transparency portals. For example, the Maine Open Checkbook. We provide a monthly update to the Maine Open Checkbook showing all state fund revenues and expenditures. Trust funds don't get captured in that because they are, again, balance sheet in nature. One of the challenges that accounting for this fund as a trust on the state's books that presents to me is we would have to summarize all of the transactional activity at the end of the year in order to create revenue and expenditure recognition in our annual financial report, or in any interim report that the legislature chooses to request. So it's something of a challenge, but again, not something that's insurmountable. Along the lines of those challenges, it is possible for the state to account for these funds on the state's books as an other special revenue fund, very similar to the way we do today, and still be compliant with your intent in the legislation that this be treated as a trust. The current language in LD 1693, however, eliminates the requirement for additional legislative authorization or financial order. The challenge that creates for my office specifically is that our financial accounting system is designed in such a way that disbursements can only be made on the basis of an allocation and allotments. Consequently, we would have the challenge internally of determining how to treat this particular account differently than other special revenue fund accounts in the accounting system. Again, it's not insurmountable, but there's some logistical or mechanical considerations that the controller's office would have to consider in determining how best to carry out what's intended within these programs without adding constraints that are not allowable within the legislation. I'll also add that in the language, there is a requirement that DAFs provide services. I would just want, for informational purposes, for the committee to understand that the state's financial service centers do operate as an internal service fund, whereby client agencies are billed for services based on a break-even cost recovery model. So there would be a cost associated with the utilization of DAF's service center personnel in the accounting and fiscal management of these funds. That's typically handled as a direct bill to the entity. So the board overseeing the trust fund would see those bills, would have the authorization authority and the understanding of what's being charged. Within the current language, again, there is a sentence or a phrase that says that that DAF shall carry out all lawful instructions, which is fairly broad language, and I only bring that up from the accounting perspective. As I mentioned before, we have a standard setting body that dictates how we have to report things from a financial reporting standpoint, and a similar standard setting body that says how the Office of the State Auditor has to review those funds. So though there may be instructions that are completely legal, they may put us in a position where it's difficult or impossible to do the appropriate financial reporting or do the appropriate auditing. So it's just a point of concern that maybe that language might be a little broad just by using the term lawful.
We,
That tends to imply statute and constitution, not necessarily standard setting bodies that promulgate regulations that we have to follow.
Thank you. Let's give Senator Moore a chance to ask her question.
Thank you, Senator Claxton, and thank you so much, Doug, for being here today. The transparency issue, is that something that we could include as a requirement of this trust or the board of the trust?
It is. It is. Again, it really comes down to layering all of the pieces that my office would be required to comply with in making the determination whether we would account for this in the accounting system as a trust fund or as an other special revenue fund. Again, no issue with compliance with the law. It just means the more requirement there is for me to treat it as revenues and expenditures, the more likely it is we have to include it as an other special revenue fund, and I will have to come up with a means by which we can treat this fund a little different than the other special revenue funds, in that it would not be subject to legislative allocation, would not be subject to allotment control. It's a matter of adjusting the constraints that are in our system to allow this this fund to operate the way the legislature intends for it to.
Okay, thank you.
So did I hear you say then, because this entity isn't required to meet GASB standards, it really is a special revenue fund, another special revenue fund, and is not really a trust by the definition that you use in accounting?
That's correct.
So
and I'll be honest with you, that's
anything.
not all that unusual. We have other accounts that are managed as trusts in the state's financials, state's accounting system, that are not reported as fiduciary activities in our financial report.
And the transparency loss is really on the expenditure side, not the revenue side, because as it's constituted, the only revenue comes directly from the general fund once a year, or however.
That's correct. It's that in that case, it's really a transfer into the trust. The revenues would still maintain their identity as master services agreement, tobacco settlement revenue. It's the expenditure detail that would not be under that model, would not be automatically reported in the checkbook. However, if there were language in here compelling that be included, again, that just helps me to make the determination how best to account for it in the system so that can be accomplished without a lot of manual intervention.
So that might not be in the state's checkbook, but it ought to be in the trust's checkbook.
Absolutely. The
Okay.
detail will exist in the state's accounting
Right.
system. It just won't be summarized and reported in the main open checkbook public transparency portal.
Thank you. Thank you for that. Any other questions? All right, keep on keeping on.
All right, and I think the last question that I have that was posed is how these funds would be audited. As I discussed a couple of years ago, I don't want to speak on behalf of the Office of the State Auditor, but I'll tell you based on my experience as an auditor and my experience in the Controller's Office with similar entities, these funds may or may not be subject to audit by the Office of the State Auditor. It is likely they would be covered by the Office of the State Auditor if they are maintained in their entirety on the state's books. Meaning at some point, if the board overseeing the trust says, we want to manage the accounting for this off state books, and we just transfer the trust balance to them, the state's Office of the State Auditor likely would not be the entity that would audit them. It would likely be an independent party. If they remain on the state's books, the Office of the State Auditor has visibility and insight into all of those transactions and could actually perform that work without the need for an additional cost for a CPA firm. This is where we get into the difficulty a little bit, is that because this is a body corporate and politic, there is the requirement to have a separately issued financial report. Excuse me, the Office of the State Auditor doesn't currently issue separate financial reports. Most of the component units are audited by a separate entity. That separate entity prepares financial statements, notes, renders their opinion, And because it would be a blended component unit in the state's books, the Office of the State Auditor would then rely on the work of that external auditor in incorporating that information into our financial report and into their opinion. So the way I'm reading this, the language as it's proposed, it would likely require audit by a separate non-state entity, and that the Office of the State Auditor would receive a copy of that report, as would my office. I would incorporate it into the financial report, and our auditors would rely on that work to render their opinion on the financial statements.
Okay. Any questions?
I wish it was more exciting than that.
Well, no, it's exciting if you have to use this information to make a big decision, and try and understand it well enough to be responsible for using it in that informed process we're trying to get to. So this is new information to me and very valuable. So I can't speak for the committee, but thank you for all of this. We're sure there's no other questions. Did you have anything else you wanted to add, Mr. Courtnoy?
No, I think I've covered everything that I think you were looking for, and everything I think is pertinent at this point. I will remain on. I have an appointment, medical appointment this afternoon, but I will remain on till a little after noon time. So if there are additional questions, I will be here.
Well, speaking for myself, this has been very helpful and provides a lot of insight into some important questions that have been raised. So thank you again for your time and your expertise and for your decades of service. Okay. Looks like the next we're going to hear from State Treasurer Beck and hear what he has to say. Welcome, Mr. Beck. We're ready to hear about your perspective on all this.
Thank you, Senator. I'm just trying to join. I can see all of you. I'm not sure if you guys can see me.
Not yet. Usually we make an announcement about anticipated and unanticipated technical difficulties. I left that out this morning, but we regularly, like every day, run into something. So glad you could be here.
Yes, thank you for having me. I believe the last time I was here from your committee, I think was about 3 years ago, talking about ABLE accounts. So it's nice to see these members. Your OPLA analyst asked me to appear before you to briefly describe the role of the Treasurer's Office with the Fund for Healthy Maine and offer, if it's helpful, some comments with regard to LD 1523 and LD 1693. Current law requires us to send you and the Appropriations Committee an annual report on tobacco settlement payments. We did that back in January. I've included that. I submitted through your OPLA analyst both some written testimony, but also some attachments. That's attachment A. You likely have seen that before. Your analyst also used the term cash flow history, and so I've included that as well, just if you'd like to take a look. That information, though, does come from the State Controller's Office, but he has signed off on us releasing that to you. And lastly, to one of his earlier points about essentially expenditure transparency, the last attachment, document C, shows programming over the years, where the Fund for Healthy Maine money, tobacco and otherwise, went for programming. And I edited that page just for length so it would fit on one page. When it comes to these two bills, like AG Fry, don't have any comment on the policy merits or otherwise, really not my proper role. But I just wanted to note a few things. One is that both bills, and this is important, if you take a look, you don't even have to take a look, but I can tell you, with limited exception, the Fund for Healthy Maine relies upon an advance from the general fund, usually because at the beginning of a new fiscal year, the cash balance is low, and so an advance takes place. Importantly, both bills allow for that advance to happen. Both bills also say, look, any investment or interest income of this new fund, it belongs to the fund, doesn't belong back to the state. That's perfectly fine, I would say, and I would just ask that if you proceed in either bill, be some sort of specific language that interest or earnings, investment earnings on advanced general fund dollars do in fact go back to the state. That's just been our internal practice. And at this point, the Fund for Healthy Maine it's in the treasurer's cash pool. It is very much state money. And so we of course don't control what it's spent on. That's decided by you and others, but we do manage the funds, manage the interest and investment earnings. Again, when we do an advance, we make sure that money goes back to the general fund. Your analyst also asked me to discuss briefly the Efficiency Maine Trust. I can tell you that the Efficiency Maine Trust is probably most like the structure that the proponents of these bills seek. It's very much external. It's not in the treasurer's cash pool. It's listed on our annual financial report as an independent outside non-major component unit. The fund is actually managed by Camden National Bank, and I can tell you that at the end of the last fiscal year, the balance was $54 million. So I hope that information was helpful, and I'm happy to answer any questions about my comments or anything else.
Are there any questions? So correct me if I'm wrong, but what I heard was the way it's currently written, the bills would direct interest and earnings back to the trust. And you're saying that that's not our standard operating procedure. They should go back to the general fund.
No, that is standard operating procedure. Just there will be a period of time when, I think it's fair to assume if you think about the timing of tobacco payments, they come in April. They come in one big lump sum. It's a very exciting day in our office when they come in. There is a period of time that the Fund for Healthy Maine relies on, almost a loan from the general fund. And so my suggestion to you is that that there be some sort of language that says, look, when the fund is comprised really only of a general fund advance, any investment or interest earnings go back to the general fund. That might be a little bit hard to wordsmith, and right now it's something we just do in practice because it's controlled by our office, and sort of everyone tends to agree with that. But to the extent you're creating a new fund outside of the treasurer's cash pool, some sort of external account, you might want the certainty of law for the future, if that's an important issue to you.
Okay. Yes, Representative Perry.
Yes, thank you. I'm sort of trying to understand this. The general fund that goes into the Fund for Healthy Maine, is that more a cash flow for the programs that it's working with?
Precisely. It's a great way to describe it. It's because.
Right. And any idea of what programs create that deficit?
That need.
We start at the end of the year with a surplus. So I'm trying to figure out if it's about cash flow and that money is there at the beginning, how does that end up being a cash flow problem?
I can't tell you, what if you look at, for example, attachment C, if you look at, what programming relies on that advance, and there have been years when advance has not been necessary, right? But it is simply the case that it has happened in the past, and I think it's fair to expect it may happen again.
Thank you.
Yes, Luke.
Well, I think I'll just speak to that a little bit, Representative Perry, just so you understand exactly why there is an advance. And I see it every year when I'm looking at the revenue. I see the advances coming in, and then at the end of the year going out. One of the things I always do at the end of the year is just make sure that goes to zero, because essentially what's happening is the tobacco settlement money comes in April, but the programs start in the previous July. So they need money to get from July to April when the actual tobacco settlement money comes in. Once the tobacco settlement money comes in, all those advances that are given at the beginning of the year are sent back to the general fund and thus replaced by the tobacco settlement money. So I think what Treasurer Beck is sort of referring to is during the time when that money is in the Fund for Healthy Maine, the interest goes back to the general fund because those are general fund dollars. And I think what he's looking for is some language that would require that here as well, so that those general fund working capital advances aren't creating interest for the tobacco settlement. Only the actual tobacco settlement money creates interest for that. Does that make sense?
Yes, it makes sense. And I guess my question then becomes, has there been a way to arrange this so that that does not have to happen?
Honestly, the only way that would happen is if no money was spent for those first many months, 1 year, to account for it. Because essentially, if you for 9 months didn't spend money and then got the tobacco settlement money, from then on, you would be able to do that because you'd always have the money at the right time. But obviously, the way that this all works, it starts July, the money only comes the following April, and that's just the way it's always been.
Thank you.
Other state programs, there's ongoing revenue all the time, whether it's GPA or revenue sharing. People are buying things at the store with sales tax and filing their income taxes all year round.
Okay, any other questions or points to be made with Treasurer Beck? I'm not seeing any. So thank you for helping us understand that piece of this puzzle. Much appreciated.
Thank you.
Next, we're going to hear from Michael Stoddard from Efficiency Maine Trust. I see, I guess that, Luke, is your hand still up or is it? There we go.
There's one of those technical difficulties. It's down now.
Thank you for checking that off for us. Very good. Welcome, Mr. Stoddard. How are you?
Good morning. I'm well, thanks. How are you?
Thank you for joining us. It's appreciated. So go right ahead.
Well, thanks. I don't have anything specific prepared. I appreciate Senator Claxton and Representative Meyer, members of the committee. My name is Michael Stoddard. I am the executive director and in-house counsel at the Efficiency Maine Trust, where I have served since its establishment in 2010. And I was before your committee, I think 2 years ago when this issue first came up, and we had a good discussion then. I look forward to trying to answer any questions I can today. You've had a good bit of background description from Controller Contenwar, which I think is quite applicable to our situation as well, and also from Treasurer Beck. I can tell you a little bit about just the general framework, and it won't take long, and then maybe you can ask whatever questions are on your mind.
Representative Perry, did you have a question for Mr.
I'd
Stoddard?
like to, but I would like him to finish.
Okay. Go right ahead, sir.
So the legislature created the trust back in 2009, and we took over operation of administering certain programs in the summer of 2010. And we were established as an independent quasi-state agency. We have an independent board of trustees that is appointed by the governor and confirmed by the legislature. And we have some degree of oversight from the Public Utilities Commission, which I'll explain in a second why there's that connection. In the statute, the purposes of the Efficiency Maine Trust are laid out, and those include to provide uniform integrated planning and program designs for energy efficiency programs for the purpose of reducing energy costs and reducing carbon emissions from the energy that we use in our state. And we do that through a combination of practices that involve providing education and training about energy efficiency opportunities, but most significantly by providing financial incentives in the form of rebates or grants, using competitive solicitations and other kinds of rebate design programs. So the reason that we have oversight from the Public Utilities Commission is that traditionally a major source of the funds for this program have come from the electric utilities, which they collect from electric utility ratepayers. And that is referred to as the conservation charge, the energy conservation charge. And that has always been overseen and regulated by the Public Utilities Commission. The amount of those, the amount of the budgets for that, and the approval of our plan for how to spend those funds. So that's a little bit of an oddball situation that you don't see in most other places in the programs that are run with a public interest in Maine. But it makes sense when you consider the history of electric utilities and natural gas utilities in this state and all the other states. They are monopolies that are regulated by our by regulatory commissions, in this case, the Maine Public Utilities Commission. They were vertically integrated. They owned all the power plants. They owned all the poles and the wires that delivered electricity. They did all the billing. And in those early days, these energy conservation programs were directed, to run them as one more function of their services. And but in Maine and in several other states, it was determined over the course of time that there might be advantages to administering those funds through an independent entity that was outside of the utilities. And so thus was formed eventually the Efficiency Maine Trust. And you have similar models in places like Vermont and Oregon and Washington, D.C. and a few other places. But in most of the other states, those programs are administered by the utilities themselves. But this has come in pretty handy in Maine because one of our biggest energy issues is not electricity, it's home heating, which mostly in this state we don't do with electricity. We've mostly done that with heating oil and propane, which are unregulated fuels. So back in 2008-9, when the legislature was first thinking about this issue, they were really focused on something that wasn't about electricity. They were really focused on what are we going to do to help Mainers manage their energy costs for home heating and for businesses that needed heating. And they liked the idea of the concept of what they saw with the utility efficiency programs, but they wanted to put all of that under one roof and help people save other fuels as well as electricity. And so that's why that's part of the motivation to have formed Efficiency Maine as a standalone entity and to put all these similar programs under one roof. Another motivation was that it just happened to coincide with the time that Maine was debating whether to join the Regional Greenhouse Gas Initiative, what we call RGGI, the acronym RGGI. And part of that program involves distributing revenues that are made by the sale of carbon allowances through an auction process. And so the proceeds of that had to be decided how to be spent. And so the policymakers at that time thought that the most important objective would be to help fund programs to reduce our consumption of home heating oil and also lower our carbon footprint in the process. And so you can sort of see the common thread of all these different kinds of programs, which is helping people reduce their energy consumption by investing in high efficiency light bulbs or high efficiency heating systems or insulation in their attic in their basement, or more efficient equipment at their business, more efficient machinery at their factory, and that kind of thing. And so it was all put under one roof. So we have multiple funding streams that are coming to us that we're handling, and then we've been running these programs for 12 years now. So I will stop there because I think the basic structure is your key issue that you're considering, and I'm happy to answer any questions.
Thank you, sir. Representative Perry, do you have a question?
Yeah. Yes, I still do. Thank you. Just looking at a number of things. When Efficiency Maine was set up, it was at a time when a tax was being determined on the utilities for efficiencies. And then it was set up. I mean, I'm trying to look at your funding sources. From what I understand, it is a tax, and it's an ongoing influx of monies. Is that what you deal with, or is this one-time monies that occur?
So it's both, but let's start with the electric utilities funding first. So it's technically not treated as a tax. You might consider it one, but it never flows to the state treasury. It is a charge. It is a special charge that is rolled in with a whole bunch of other charges that comprise the portion of your electric bill that they call the transmission and distribution charges. So your electricity bill is fundamentally made up of two parts, roughly equal parts. One part is the actual energy itself, the little bits of electricity flowing through the wires, and that costs one bit. And then the remaining part of the bill is the cost to maintain the grid and do all the billing and provide all the services to get that electricity to your door. So buried in there are a bunch of different costs that are required of the utilities to provide those services, and this is just one of them. And it's so that was the ongoing annual revenue that was the core part of what Efficiency Maine received and receives every year from all of the utilities. But through the years, pieces have been added to that. First, the natural gas utilities were added. So now they also provide a small conservation charge that's collected on every bill. Then the RGGI proceeds were added, which was from the sale of those carbon allowances. Then that just happened to coincide with 11 years ago. You may recall that the federal stimulus programs started, and a big part of those programs involved new energy projects throughout the states. So we managed a bunch of federal grants at that time that were one-time funds. They were not continuing. And then finally, through the most recent couple of years, there have been a few settlements, not unlike the tobacco settlement, but much smaller, of course. But in some cases, the decision was made that Efficiency Maine Trust's programs would be the kind of thing that people wanted to do with those settlement funds. And so those funds have been administered through us.
Does that answer your question, Representative?
It does. And can I ask another question?
Sure.
I'm sorry.
No, go ahead.
Get a sense of where the similarities are and where the differences would be. Also, as a trust, you say that you actually do report to the PUC. In terms of your own financial auditing and all of that stuff, where does that transparency occur? And where does that then fit into what is the state budget?
Two ways that occur to me right off the bat. First of all, everything that Controller Cote-Noir described, we do. We are a component unit of state government. We do an independent audit with an outside auditor, and then we submit the results of that audit to his office on by October 15th of each year. So it goes into the overall state audit report. So that's one piece. We are, the committee of jurisdiction for us is the Energy and Utilities Committee, the EUT. And we report to them twice a year with just our basic financials. So they have insight into what's going on every 6 months, they can see what our budget is and how much we've spent. And then we have board meetings that are publicly held once a month. They're open to the public, and we report on our financials monthly. So there's a third way that there's transparency in what's going on. Our plans and our budgets are one of the things that the statute directs us to do is craft a 3-year strategic plan every 3 years, not surprisingly. And that's a public process. And then our board ultimately votes to accept and approve the final plan. And the budgets are all laid out in that plan. Obviously, there are things that change from time to time. Revenues that we had forecasted may come in a little higher, a little lower than we expected. So we make adjustments annually to that. And then we have an annual operating budget that our board also approves.
Thank you.
Representative Connor.
Thank you, Mr. Chair. Thank you, Mr. Starter, for being here. Two-part question, if I may. The generation bits, the T&D bits, and the Jerry bits, where did they all go prior to efficiency main being spun up and coming forth?
In the 80s and 90s, when these programs were first devised, it was all internal to the utilities. It was just part of their approved annual tariffs and plans. In the late 90s, Maine, like a lot of other states at that time, decided to restructure the electric utility industry, forced the utilities to sell off all their generation assets. So at that point, they just became utilities of the transmission and distribution part of that equation, but not the generation. So they don't do the generation anymore. Merchant plants are providing that electricity and delivering that. It's all collected through your electricity bill from your electric utility, but the part of it that has to do with generation, they have no control over. At that time, Maine's electric utility said, we don't want to do this anymore, this energy conservation stuff. Find somebody else to do it. And so at that time, the legislature directed Maine's Public Utilities Commission to figure out who should do that. And for a few years, for almost a decade, the Maine Public Utilities Commission had run these programs out of what they called the Energy Division. And there was a small staff there, and then most of the programs were subcontracted out to different service providers. So since then, and since the legislation I described at the outset that occurred in 2009, it's all been put under one roof. And so now the funds come to us.
So with the formation of Efficiency Maine and that added layer, have efficiencies, obviously it's in your name, but have efficiencies in the process come about? Have additional revenues, has more money been recognized due to Efficiency Maine being spun up? In other words, is it worth the squeeze to have that formation, to have energy Efficiency Maine, I guess is what I'm trying to say.
That's a really interesting question. I mean, I'm confident that the answer is yes. The short answer is yes. The longer answer we could probably talk about all day, but I can give you a couple of ways in which I think it has been worth the squeeze. First of all, you had this proliferation of very similar programs being run out of several different places, and that was inefficient. They were all kind of doing the similar thing or very close to the same. So you had separate sets of contracts, separate sets of staff, separate phone numbers, separate websites. So not only was it very confusing to customers and to the businesses that were trying to provide services that are promoted through these programs, but you had all that overhead that was redundant. So that wasn't very useful. So we've consolidated all that into one place, and that was better for customers, I'm sure, and reduces costs. The other thing is we have no profit motive. We're not for profit. We're a quasi-state agency. So we're a cheap date, generally speaking, and there's no markup on what we do. Anything that we're able to figure out how to do in-house, we do and provide as a service that I'm certain is a way better bargain than if you had to outsource it or if you ran it through the utilities. Also, because we started to grow in size by putting all these things under one roof, there's a couple little things that I don't think people really realize, but we were able to establish enough capacity, in-house capacity, to do some things at scale that if we had been smaller or if these assignments had all been split up and assigned to different people, you wouldn't have had the economies of scale to do. So I don't think most people realize that we track, we keep a record of every single project that we have helped provide financial incentives to, and we are able to sell there's a market in Massachusetts that serves all of the New England grid, and you may have heard of ISO New England. They are the manager of the markets that supply electricity and other elements of reliability to the grid in New England. It's a regional system. And long story short, there are a variety of markets that exist there. And if you have some kind of an energy resource that you can trade into one of those markets, you can make money off of it. Well, it wouldn't be worth it if you were just one customer or just one town or just one small project. But because we have thousands and thousands of these little projects, we can aggregate them all together and they're all stored in our database. So we can prove to them, we know how many light bulbs, how many heat pumps, how many air conditioners, how many refrigerators, et cetera. It's worth something. So in the prior years, we've achieved a revenue stream from selling that resource because it accomplishes what they wanted it to accomplish. They compensate us for that. So we take those funds and plow them back into our programs, which means we can reduce the strain on the other revenue streams that we would have asked for to do our work. Some years it's been just a few $1,000,000. One year it was $19 million. So we were able to relieve the other revenue streams that we would have had to ask for. And that's only because we're big enough now to have the capacity to do a thing like that. So there have been a number, I think, of nice dividends from having established it this way that didn't exist before.
Thank you. Thank you, Mr. Chair.
Are there any other questions of Mr. Stoddard? I'm not seeing any. I note that, thank you, sir, for being here. Thank you for your attempts to educate us about Efficiency Maine and how it works. And we'll have to figure out how closely to approximate what this is about for Fund for Healthy Maine. Thank you.
Good luck. Thank you.
We also have Michael Russo here, who has handled the financial side of this endeavor. So welcome, sir.
Hi there. How are you?
Good, thanks.
Sam asked me to come answer a couple of questions about the fiscal note side of how Efficiency Maine interacts with the UT committee. So some of those questions hopefully can be answered by the rather substantial packet of fiscal notes I provided to him. If you look at them, the cover sheet has a link. You can see all the testimony, background amendments, and stuff like that that happen to the bills. But the fiscal notes themselves are pretty generic when it comes to Efficiency Maine Trust, and that's because of their structure. There's no appropriations or allocations that we would really be addressing as a legislature in their operations. Rather, it's just the intent of what they're supposed to be doing and how they're supposed to function. So when you look at those fiscal notes, you usually see a snippet on the top that says, current biennium cost increase, Efficiency Maine Trust, current biennium revenue decrease, Efficiency Maine Trust. But there's no appropriation or allocation that we provide unless it's a specific example of provide $25 million of general fund dollars to do more heat pumps. And that functions as a grant really to Efficiency Maine Trust. There's a general fund appropriation to give that money to the trust. It goes to an account that's in the state books, but then it really gets given to them as a grant. There's no financial orders or anything like that to authorize the transfer. It happens. So from my perspective, the allocations occur in the bill. I make sure the amounts are correct and the description is correct. But then that's it. There's no follow-up on my part to really do anything. So that's how the fiscal notes work. You'll see a couple of bills that reference efficiency main trust because of energy efficiency programs. So the bill said, shall consult with efficiency main trust or shall include an efficiency main trust in these programs. And in that case, the fiscal note just says, additional costs of the trust can be absorbed within the resources, just to show you that they get involved a lot of other aspects in the Energy, Utility, and Technologies Committee's bills. So the funding, Director Stoddard described pretty good. I don't know if there's anything I can add that would be helpful to that. How the funds are transferred, again, that's more or less automatic. There's no real, someone clicks a button on my end or someone in this office does anything. It's all goes to the trust directly. They're the recipient of those funds. Or if the state receives the funds first, as in federal funding, the state functions as a pass-through. So, appears in the budget as a federal funding line. Efficiency main trust is going to be the ultimate recipient of that. It can get adjusted through a budget bill, but there's no additional activities after that. The committee generally reviews the funds, as Director Stoddard indicated, by annual reporting to the committee. Annual reports are posted online. If you go to the Efficiency Main Trust website, they have their reports. If you go to the Energy, Utilities, and Technology Committee, they have a pretty extensive list of all the reports they receive. Efficiency Main Trust falls in there. There's also a really nice PDF presentation. So if you want to learn more about how that funding functions, certainly recommend reading that too. And the last question was financial orders, very rarely used, mostly because those accounts don't function in the state. They're Efficiency Main Trust accounts. So there's no financial order to adjust. On the rare cases that there's a allocation or appropriation involved, we could adjust it through financial order then, but those are so often or so rarely used that there's no financial order to adjust. So that's kind of in a nutshell. If anyone has any questions, I can certainly answer them.
So even though there isn't a presentation to EUT about where individual dollars go, that will be findable if the committee wanted to get into the weeds, because that's public information.
It's public information in the annual reporting, but it's not something that I would be able to create a report based off of the state financial systems. I could tell you in the previous fiscal year, X amount of dollars were appropriated or set aside for the fund, but there's no way to pull up a report that would say this is where each individual cost or something like that happened within the trust. They do that through their annual reporting, and they're audited as an independent entity.
Right. And so they're considered a blended component unit and contracted for audit services.
Yes, they're we refer to them as the quasi-independent entities or quasi-municipal.
Okay. All right. Yes, Representative Connor.
Thank you, Mr. Chair. It was actually in reference to something that you just mentioned. You said that the information would be findable because it's public knowledge. My question is, taking it a step further, not just findable, but what's the oversight of it? Does EUT have any oversight of that, or is it just something that they can find and it's handled strictly through the fund?
I guess to kind of split that off, if you were looking for, say, an individual expenditure, how much did you spend on this specific program or this specific contract? That's something that Efficiency Main Trust would have to answer. It's not something we could answer. I could only say the legislature directed them to increase funding for heat pumps in the state by X amount in the previous bill, and we gave them that funding. But you'd have to go through Efficiency Main Trust to get specifics, and that would be through their annual reporting, or if we were able to talk to them about it, they could say, well, this program is currently at this particular junction. And Director Stoddard and his staff is pretty good at doing that. But there's no, I could create a report based off of the state system saying what they do, what they don't do. So it's findable to a certain level, but the extreme specifics would probably be a little bit out of that reach just because of their nature. They're not being hidden or anything like that. It's just that there's a minutia of the stuff that you wouldn't be able to see.
And Director Stoddard did say that there was a twice-a-year report to EUT by Efficiency Main Trust. Okay. Any other questions? Thank you for that information. Thank you for your help with this. We appreciate your time.
Absolutely.
So next up in the flow of things would be hearing from Luke Lazur. I haven't gotten my message yet from Representative Griffin, but we've been sitting for about an hour and 20 minutes. Why don't we take about an 8-minute break and come back at 11:30, and we'll hear from Luke. So we're on break until 11:30. Thank you for indulging us, Luke.
Not a problem. I was glad to get the break myself.
We have assigned responsibilities in the committee, and Senator Moore is in charge of the 3-minute clock, and Representative Griffin's in charge of the reminder every hour, hour and a half, time to move around. So it's ingrained at this point. It's ingrained at this point.
I was just going to do it when you said.
I could tell. Thank you. All right, so we'll resume our conversation about Fund for Healthy Maine, and we'll defer to Luke Lazur to, we've been joined by Senator Baldacci. Would you go ahead and introduce yourself, sir?
Thank you, Mr. Chair. I'm Joe Baldacci. I represent the city of Bangor and the town of Herman in the Senate District 9. Thank you.
Representative Stover, are you in a circumstance where you can introduce yourself? Maybe tied up with other office obligations, so she'll join us when we can. So Luke, the floor is yours.
Great. So I think it was a good break because it's been moving along very quickly this morning, and I think I'm just about to slow it down a bit. I've got quite the little presentation for you all. Some of this will look very familiar because it is the same sort of information that I gave during orientation last year when we talked specifically about Fund for a Healthy Maine. But I think the way I wanted to approach this was sort of talk about the current structure, what things look like now, and then what the new structure might look like. Some of the new structure discussion is not as clean and clear just because it's not clear exactly how it will look in the future, but I'll do my best to sort of lay out what it might look like. And the final thing I'll do is just go over some questions that have came up back in the 129th and some that have also been asked of me this year. So I'll just walk through some questions that I've heard. Obviously, along the way, if there are any questions, please ask. There is a lot of information I'm going to be throwing up on the screen here, and I'll do my best to just make it as simple as possible. But I'm about to share my screen. All right. So we can all see that?
Yes.
Great. I want to walk through, as I said, sort of the current structure. So the way I'm going to approach that is just by looking at what information I'm able to present to the committee now under the current structure and what that information provides for everyone. So we'll talk about the FHM statute a bit, just to have a baseline of where things are now. We will also go over the 10-year allocation file. I'm not going to walk through line by line. I'm just going to show it to you so you see the information that we have. We will walk through the most current FHM status document, which gives us sort of a basis of how much cash we expect to have at the end of the biennium. The final document I'm going to walk through is a document I create, and it's really only updated annually. I can update it at any time in between, but we do it annually to put into our compendium file that the Office of Fiscal Program Review prepares. And I want to show this year's, if I can, because this is just quite the lovely file. And I want to make sure everyone sees it. It won't do it because I'm in the way. Okay. It's a lovely orange for anyone who wants to see it. It's over in the Office of Fiscal Program Review. And it is a file that we use to outline all the revenue that comes in and all the different sources in state government. And so one of those obviously is the Fund for Healthy Maine. And this file breaks down the revenue. So it's not just what's the total, it actually shows where the revenue came from and what types of sources it was used for. It doesn't do it account by account, but it groups the accounts into typical sources. So I'm going to walk through these, and this gives you the lay of the land of the current Fund for Healthy Maine structure. So first, we'll just quickly talk about the statute itself. I think Attorney General Fry spoke a little bit about this, but it was created PL 1999, Chapter 401, Part V. The statute was created after the Master Settlement Agreement was finalized as a way to identify how that funding would be spent. These funds that come in from the master settlement agreement have always been identified separately in the accounting system. Originally, when it started, they were their own other special revenue accounts. It worked, but it was definitely a little harder to keep track of everything just because it was in with lots of other special revenue. So with PL 2011 Chapter 701 created a brand new fund called the Fund for a Healthy Maine, where all the revenue and expenditures are now tracked. So it's really easy now for me to go in and identify everything that's in the Fund for Healthy Maine as far as expenditures. It's also important to note that the way this works now, and you know this well, having gone through this last year in the biennial budget, and it's coming around with a supplemental budget too, the legislature allocates all the Fund for Healthy Maine funds, and the department then expends the funds based on those allocations. The final note is just that any unspent funds at the end of the year in those accounts lapse back to the Fund for Healthy Maine. So they don't stay in the individual accounts. If at the end of the year the money wasn't all spent, it just goes back into the big overall Fund for Healthy Maine. And we will see that as we move along and look at the status document, you'll see where that shows up. So really, if you're wondering how did we get here, this statute outlines that for you. So we'll go through a few parts of the statute just to give some of the basic outlines. So the first part we'll look at here is the sources of the funds. And there are three main items outlined here, A, B, and C. A is the master settlement agreement money. B are just other funds that come into Fund for Healthy Maine. In this case, the only funds that we receive certainly annually that come in are the Hollywood Casino slots revenue, which 10% of that goes directly to the Fund for Healthy Maine. That money, and we'll talk about this more later, that money is directed specifically to be used for drugs for Maine's elderly. So that program gets the money that comes from the Hollywood slots. And the last piece is the interest earned on Fund for Healthy Maine's funds. I will note that these three sources, we will see them in a couple of other documents that I will show you because we always break the receipt of the funds out into these three buckets. I will also note that this section of the statute is changed in very minor way by both LD 1523 and LD 1693. Essentially what it does is it says that if this Fund for Healthy Maine trust is repealed, all the funding goes back to Fund for Healthy Maine. So there is language in here in the bills, but that's all it's really doing. The next part of the statute talks about unencumbered balances. And essentially it's that any unencumbered balances lapse back to the Fund for Healthy Maine. And as I said, we'll see those later in the status document. No FHM funding is available without specific legislative approval. That is in this language a few times. Essentially, it's that the legislature, allocates the funds and decides where those funds should go. We will see this directly on that 10-year allocation document. That is the document that outlines what the legislature approved. Next, it talks about some restrictions. The first one says that allocations from the fund must be used to supplement, not supplant, appropriations from the general fund. Every time Fund for Healthy Maine comes up, we talk about this language. The fact is that that's the language that's in the statute. But as Attorney General Fry pointed out, and you've probably heard from me and others many times, no previous legislature can restrict a future legislature. So essentially, if the legislature decides that they want to use the money to supplant funding, they can do it. There's one way to really do that is just to add some notwithstanding language in that just says, notwithstanding this statute, we're going to go and do something. It's also important to note that the notwithstanding language is not required. If you were to pass a piece of legislation that allocated funds in a way that supplanted some current general fund dollars, just the mere fact that that legislation passed is enough. You don't need the notwithstanding language. The reason we like to put notwithstanding language in is that it clarifies legislative intent. It makes it clear that the legislature who passed this bill knew they were going against this specific piece of statute, and they're okay with that. The last thing I wanted to note here is that Fund for Healthy Maine funds cannot be transferred to the general fund without legislative approval. We do see this from time to time. It hasn't happened often in the most recent years, though it did happen a couple of years ago when some money was sent to the Main Care Stabilization Fund. And that was a part of a budget that was done where specifically 14.5 million went from Fund for Healthy Maine to the Main Care Stabilization Fund. And it was always sent there with the understanding that if in 2 years it hadn't been used, it would be sent back, which happened in the most recent budget that you passed last year. The third part of the statute I wanted to show are the health promotion purposes. I'm not going to read through them all. You can see them there. But these are the purposes that were identified in the original statute that the funding should be used for. Just like I said earlier about the not binding future legislatures, if a current legislature wants to spend Fund for Healthy Maine money in a way that doesn't meet one of these requirements, they can do that. They can either use notwithstanding language or just allocate the funds, and that's fine. There has also been cases in the past where a new promotion purpose was actually added to statute when funding was sent somewhere that wasn't in the current statute. So that has happened in the past. The last piece of statute we'll look at is just the that there is a legislative committee review that's part of the statute. And you guys have seen this in the past when a piece of legislation is in a different committee and it in some way touches Fund for a Healthy Maine. That committee will then send the report to you, the HHS committee, to review and give some feedback. That feedback is not binding in any way, but it does provide the Health and Human Services Committee a chance to discuss how the Fund for Healthy Maine funds are being used. So the first document we'll look at is the 10-year allocation document. As I said, this is the one that shows what spending has been approved by the legislature over a 10-year span. So the current file covers state fiscal year 14 through state fiscal year 23. So that's through the most current biennium. This document provides a lot of detail and is a place that I know people go because it's brought to me quite often with certain things circled and highlighted because it is broken down department and program. It also does include legislative position count, whether the funding is personal services, all other, or capital, and then a total of all spending in the account. It does also note year-to-year increases, which are a question I get all the time, so it is helpful there. So really, if you're wondering how much FHM funding have we provided to program X in the past, this is the document that answers that question. So as I said, I'm not gonna walk through line by line in any way, but here is the document. And you can see that the titles of the programs in Department of Health and Human Services are done in such a way to give some idea of what this money is spent on. So you can see that this first one, 024 10A 014325, which is in the Maine Center for Disease Control, is specifically an oral health account. And all the accounts have some sort of title to give some idea of what the funding is spent on. So I will just scroll down to the last page, and you can see here, we can look at the grand totals of where we were in the current biennium. So there are currently 13 positions across all departments that have Fund for Healthy Maine money. There's around 1.5 million of personal services in each year. And there's funding upwards of 52 million and 53 million in all other. So the total spending that's allocated in the current biennium is 54 million in state fiscal year 22 and 55.5 million in state fiscal year 23. So that's where we currently stand. So that document shows the ability to spend money, what the legislature has approved. This document is a document that tries to walk through and identify how much money is available in the fund. Because year to year, not all money gets spent every year. And so there's always some carryover. And this is what tracks all of that funding so that we know at this point in time how much money we expect to have in the Fund for Healthy Maine at the end of the biennium. It's broken down into three parts. The first part we'll look at is the revenue. The second part are the legislatively approved allocations. And this part also does include transfers when there are transfers. And the final part is the one that gives us the total change in a year and the ending balance. So we'll start with the revenue. And one thing to point out about this is the piece in all of this discussion that will remain the same. The information I have on revenue as far as it coming into the account will be the same. So I'll still be doing the revenue forecasts the way I do now, and we'll still see the money. The rest of this document, that's not really the case. And so we'll get into that a little bit, but I just wanted to point out that this would largely remain the same. So all this document is doing is identifying what we're estimating for revenue in the fund. Because of course, until the money actually comes in on April, say 15th, which is around when it shows up each year, we don't know the exact amount, and no one does. And I have conversations with AAG Reardon all the time about this as we're trying to figure out, well, what are our estimates? Because there's just no way to know until it comes in. But we do get files from the National Association of Attorneys General that gives us some idea of what they're estimating for the tobacco settlement piece. Separately in this office, and actually, since you just saw him, Michael Russo is the one who handles all the casino forecasts. And so I'm able to get an idea of what they're expecting for the casino piece of that. And then the interest income comes from the treasurer's office. So we're able to put all that information together and identify an estimate. But what does happen is, as you know, twice a year, we do a revenue forecasting committee meeting. And in that meeting, the numbers change. So what you're seeing here on this document is we started this file with the December 2020 revenue estimate, which was 42.5 million for fiscal year 22. Then when we did the May forecast, last May of 2021, we increased it by 430,000. Then when we did the December 2021 revenue forecast, we increased it by another 2.5 million. So right now we're estimating the revenue is going to be 45.4 million for state fiscal year 22. This next section, they're all zeros at the moment because this info only comes in when we close out a year. So it'll only come to us after state fiscal year 22 is closed. But it's important to know at least what's going in here. So these numbers will be updated when we close out the year. This first one, the adjustments to prior years, will be all of the adjustments that happened. They're generally just manual transactions that happen, whether it's because of an audit or some other purpose, but they will make manual adjustments and we have to adjust that here. The second one is the more important one for what we've talked about before, the lapsed balances from unexpended funds. So essentially at the end of the year, all of the accounts are closed out and any money that's left in them goes back to the Fund for Healthy Maine. That's what shows up in this number is the actual amount of money that went back into Fund for Healthy Maine. That becomes cash that can be used in future years. And that's why it's really important here. So then at the bottom, what you see are the total, what we call resources, which is all the revenue over this biennium. This next section identifies the allocation and other uses. So this is what the legislature has allocated to be spent. So you can see that the starting point for this was the 129th legislature's baseline allocations for 22 and 23, just over 54 million in both years. Then we have the budget documents from last year. So the first one was the supplemental budget that we did. You can see there were no changes to allocations in Fund for Healthy Maine. The next was the biennial budget, which some call the skinny budget, some call the majority budget, but it was that first budget that was done. And there were some minor changes to allocations in Fund for Healthy Maine in that budget, just over 100,000 in 22 and just under 200,000 in 23. And then came the supplemental biennial budget, as we're calling it, which was the final budget that was passed. And you can see again, there are changes there. What this is doing is just laying out what in the end the legislature has approved for allocations after the end of that biennium, at the end of that legislative session. That leads to the total allocations and uses for the year. I will also note that, as I said, there was a transfer to the Maine Care Stabilization Fund back in the 129th legislature of 14.5 million. What you're seeing here, this 14.5 million, is that money coming back to the Fund for Healthy Maine because it was not spent. So that's just what that item is. The final piece of this document shows what cash we have. That's what's in these red boxes here, essentially, is what cash we have at the end of 22 and what cash we have at the end of 23. The way it works, The revenue up top, the allocations are removed from that revenue to give you what our total net change is. You can see in 22 is an increase of 5.8 million, and in 23 it's a decrease of 7.7 million. This is done fairly simply. We have a beginning balance that actually comes from the state fiscal year 21 ending balance. It's carried forward to here. So this beginning balance of 31.7 million, we add the 5.8 million total for 22, we end up at 37.6 million. That 37.6 carries to the beginning balance of 23. We work our way through. At the end of the year, we have just under 30 million that we're expecting. And this is the most recent number. This is based on the December 21 revenue forecast, everything through the December 21 revenue forecast. This is going to change again in a couple of months as we're in the midst of another revenue forecast. So I expect the numbers will change a bit, but that gives you some idea of the cash that's available. One point I want to make about this document, if we step back and look at the allocations piece, and we look here at what I'm doing here to identify the cash, under the trust scenario, that is the new structure of these bills, I don't believe that this will happen. Currently, obviously, I have this information because you, the legislature, are allocating the money. And of course, that means I'm in charge of keeping tabs on all of that. So I know exactly how much you've allocated at any given point in time. I will not have that under this new structure because now the money will go to the trust and they'll make those decisions about what's going where. So that I don't believe is something I would be able to identify, which means in the end, I also wouldn't be able to identify any sort of cash balance. The last,
Luke, could you go?
Yep.
Luke, could you go back a couple slides and help me with the 14.5? One more slide.
Yep.
So that money's coming back in as a transfer, so it doesn't count as revenue, and because it was already debited, you're back to zero?
So the 14.5 million was already money in the fund, so it doesn't go in the revenue because it was revenue we received a few years ago, right? So, but when that money got transferred out, it would have shown up on the same line as a positive number of 14.5 million because it was a transfer out of the fund going to the main care stabilization fund. So our cash balance was down 14.5 million during the time that money was out.
Mm-hmm.
Now that it's coming back, our cash balance essentially is going to go up by 14.5 million. And you can actually see that if you look at the total allocation and use number, that is simply adding the 54 million to the 14.5. And so our allocations and uses is actually under 40 million because of that money coming back in. So it essentially gives the fund cash is what that's doing. Cash is coming back in.
Okay, thank you.
It is a little confusing because transfers are always done. The sign that's used on them is opposite of what you might think, but that's just because of the way that the money moves. So the next file, and I'm not going to go too deep into all these numbers. I just wanted to show you this file, which, as I said, comes from our compendium report. But it's good because what it does is it outlines, these are actuals. A lot of the other files that I create are including some estimates. And so this is a good document to see what actually happened because this is after the year has closed. This is the exact amount of revenue that came in from tobacco settlement payments, 48.5 million. This is the exact amount that came in for the Racina revenue of 3.3 million. Exact interest earnings. And these other sources are when some transactions happen on the revenue side, they're essentially like journal entries that happen in the revenue side of things, and they just have to be accounted for in our total because otherwise our total wouldn't match up. So that's what ends up there. So what you can see here, this bottom line shows you the total revenue that actually came in each of these 5 years. This file does go back to inception back in 2000, but obviously we just show the most recent 5 years, a lot easier to do that. The bottom section of this document then is the expenditures and uses. And in the expenditure section, you can see that we actually break it out by headings that are to at least give you some idea of where the money goes and what it was spent on. That's the purpose here. And these have been used from the beginning for the same accounts. So if you look back in prior years, it's very consistent, the way these have been named. And you'll also see down at the bottom here, the uses section, what that generally is are transfers. And if you look back to 2019, when the transfer out happened of the 14.5 million, you can see it's here. What we will see in state fiscal year 22, which is the year that money is coming back into the fund for Healthy Maine, there will be a negative 14.5 million down here to show that money coming back in. So that will happen on this, but only in 22. The other thing I just wanted to point out, we're going to come back to these lines here that are highlighted separately, and it's for a bit of a future discussion. So we will come back and look at those just to help answer some other questions that have come up. So that is sort of it for the current structure. That's the information I have now. That's the information I provide to the committee, at least on an annual basis. We usually discuss it during the budget times. But this is sort of a way to try and look at what the structure might look like under the trust. And it's important to note that this is based on the FHM trust bills, the original bills as currently drafted. So that's where I'm going with all this information. So first we'll look at the current allocations to what they would look like under the trust. Then we'll do what's essentially a fiscal impact of the trust bills, and I'll get into some information about why it's a little different than what you might expect, but we'll get into that a little bit. Next, we'll talk about the designated disbursements that are outlined in the trust bills. They're specific amounts that are noted in the bill where money is supposed to be dispersed to specific places. So we'll walk through that. One other thing that we're going to go over, and this has been referred to by previous speakers a little bit, but just some of the administrative costs that are within the trust bill, because it is a little different. And these costs will now be borne by the Fund for Healthy Maine in a way that they were not borne in the past. So that'll just be something to point out those specific items. Then I just have a couple of other notes about some information in the trust bills that I think I'm essentially going to be giving you some descriptions of what words mean so that you understand exactly what they're meaning in the bill. And then the last bit we'll talk about are just some questions that arise when discussing these bills. So first, let's just look at the allocations. This top table are the actual allocations in the current biennium, and then what they will be in the baseline for the 24 and 25 biennium, because that, as of right now, we know exactly what those will be in the baseline. What they will become, we don't know. So we're just going with what the baseline is. You can see there's very little change from the current biennium into state fiscal years 24 and 25. They're both just over 54 million. If these bills were passed, these allocations would look quite different, obviously, because what will have to happen is in those future years, those allocations will go away. They will no longer exist for most of these accounts because the money will not be going to these accounts anymore. The money will be going to the trust. And then the setup of the trust and how they handle the money is still a little bit to be determined. So I don't know exactly how everything will be broken out. But what we do know is that the current accounts will generally go down to zero. There are two accounts that's not the case, and that's what I want to talk about a little further. First is the medical care payments to provider account. There is going to be an allocation in state fiscal year 24. That's part of the bill, and I'll show you the exact language for that in a little bit. But that means that there will be an allocation in 24 of just over 9.3 million. And then in 25, there'll be no allocation. So those will be actual allocations that will still exist for now. The other one is the low-cost drugs to Maine's elderly program. So the way the language is outlined, the money that goes to this program that is not from the Racino revenue will stay with the trust. So that money will go to the trust. The money that will remain in this account, and this allocation will continue, is the Racino money. So what you see here, the 3.7 million in each year, those are the actual estimates in the December 21 revenue forecast for the casino revenue that will remain. So those allocations will still have to be there because the money will go there and they'll need the allocation to spend the money. So in the end, you'll end up with just over 13 million in 24 of allocations and around 3.7 million in 25. And that 3.7 million will be ongoing into future years as well. So what does that mean from a fiscal impact? The reason this is a little different is if you look at the bill, everything starts in state fiscal year 24. State fiscal year 24 is in the next biennium. It's not part of the current biennium. And if you ever look at our fiscal notes, the only real costs that we identify are those that are in the current biennium. Everything in future bienniums there will be info there, but it's just a estimate. It's not real in the way that when we go in and have funding in the current biennium, we'll actually put in appropriations or allocations, and all of that will happen. When it's only happening in future bienniums, we can't really do that because this legislature isn't allocating or appropriating anything. So under the bills as they're currently drafted, everything starts in 24. So what I wanted to do here was lay out what it might look like in 24 and 25 with the changes we noted above. So first would be the deallocations that would have to happen from the Fund for Healthy Maine. So 24 would go down about 41 million of allocations, and 25 will go down 50.8 million of allocations. This number is simply the difference between what is the baseline that we know will go to those accounts in the next biennium and what will be left for the Medicaid and drugs to the Maine elderly program. The next piece of any fiscal impact are the transfers that would happen. These really net out. The only question really is if the money's on the state books and then goes off the state books completely, it may have to be accounted for a little differently from a fiscal perspective. But because it's in future years, it wouldn't be on a fiscal note anyway. So I'm not going to worry about that too much. But I did want to show you what the transfers would look like. So the money will come into the Fund for Healthy Maine and then be transferred, is what this is showing. These dollars, the 31.1 million, are the estimate that's in the current December 2021 revenue forecast. So that's where those numbers came from. Finally, it's to look at the general fund cost. Again, when you see our fiscal notes, always at the top, the first line is what is the general fund cost, because that is what everyone is most concerned about when these fiscal notes come. So here I'm just outlining what those costs would be in that future biennium. So in 24, it's estimated there'll be about 24 million of additional cost, and 25, it's 33.2 million. Where do those numbers come from? Those numbers are the difference between what is currently allocated for Medicaid and for Dell and what their allocations would be under this scenario. Why is there a general fund cost is probably going to be the question, because when we generally talk about allocations, there isn't a general fund cost. Their allocations are separate. But in the case of both the Medicaid and Dell funding that's in Fund for Healthy Maine, there is a direct cost, because all the Fund for Healthy Maine money is doing is offsetting current existing general fund costs. So that means that if those allocations are removed, those costs that are in Medicaid still remain, and it's going to have to now be borne by the general fund. So there truly is a cost if this were to happen. And over the biennium, that cost is $57 million, just over $57 million. I wanted to show you this because, as I said, the way the bill is currently drafted, everything starts in state fiscal year 24. So there's really no current biennium impact. When that's the case, this is what a fiscal note looks like. So this is the fiscal note that was done for LD 1961 for the committee amendment in the 129th. I'm not going to read through it all, but I just wanted you to see this is what it looks like. We will simply say at the top that there's a future biennium cost increase general fund. That is what I'm talking about here. Those amounts are the general fund increase that we're expecting in the future. But again, there's no dollars on this file. It just notes that there will be a cost. And it also notes that there's a future potential future biennium impact to the Fund for Healthy Maine. And we'll talk about that a bit in some of the questions down below, but it's essentially that there's a current way the money's spent. And under the scenario of this, where the money now goes to a trust and the trust decides how it gets spent, there's no way of saying exactly what the impact will be, but we expect that there would be some impact to some programs. And so we have to lay that out in the fiscal note. So as the bill's currently drafted, this is very likely what it would look like. The language down below might be a little different, but it would essentially look like this. The next piece that I want to talk a little bit about is the designated disbursements. All the language you see here on this file is directly from the bills. I did have to cut out a little bit down here just to be able to make it all fit on one page, but what I removed was anything that related to state fiscal year 25, because for our discussion, it's easiest just to talk about 1 year. This is the first year and what it would look like. I wanted to get this in front of you because in the document, there's a lot of percentages. Here, I'm trying to lay out what those numbers might be so that it gives you some idea of what's happening. So first, there's some things we need to know. Total money available from the tobacco settlement payment funding. That's 31.1 million. As I said before, that's just what the number is currently in the revenue forecast. The next number we needed to know was what the US CDC recommended funding level for tobacco prevention and cessation services is. That is 15.9 million. I'll just point out this report, it can be a little hard to find. It's not something that is updated annually by CDC. It was a report that was done back in 2014, where it goes through and identifies both a total of 15.9 million, but also where that funding should go to specific items. But in the case of what we're doing, we just need to know that total. So where are these designated disbursements identified? The first one is in section 1517, the funding disbursement plan. In subsection 3, it notes that the funding disbursement plan approved by the board for state fiscal year 23-24 must disburse an amount equal to 0.3 of the settlement funds projected to be received in fiscal year 23-24 for the purpose of providing medical care. So that's what you see right here. 30% of this 31 million is 9.3. That is exactly how I got the number that you saw here in this earlier document. I will also note here, and I highlighted in red, the funding disbursement plan approved by the board for fiscal year 24-25 and subsequent years may not disperse funds for the purpose of providing medical care. Just pointing that out, that's why there's no allocation in any year after up above. It's because this is the only year where any money can go to medical care, and that's that one-time funding there. The other pieces are in subsection 4, the designated disbursements. And there are a number of them here. And so we'll walk through one by one. The first one says an amount of the settlement funds received in the previous year must be dispersed to the Department of Health and Human Services, Maine Center for Disease Control and Prevention, or its designated agent for the purpose of providing evidence-based tobacco prevention and control program services. In fiscal year 24, the amount that they must get is at least 0.7 of the level recommended by the US CDC. That's the number we got up here, the 15.9 million. So 70%, 15.9 million, that means that 11.1 million of this total funding up here has to go to the tobacco related programs. Part B notes that funding must go to the Attorney General, and in state fiscal year 24, it's an amount equal to 0.005 of the settlement funds. So 0.5% of 31.1 million is just over $150,000. And just to see how that lays out with what they're currently receiving, the Attorney General right now is near 140,000. So that just gives you some idea of how that relates to the current funding. Part C identifies money that must be dispersed to an administration fund. And in fiscal year 24, the amount is equal to 0.003%. That is 0.3% of 31.1 million. It's just under $100,000. Part D says that an amount not to exceed 0.05 of the settlement funds received in the previous year may be dispersed to the Internal Stabilization Fund. So that's important to note. The others are must, this is a may. So this money does not have to go to the Internal Stabilization Fund. It just allows for up to 0.05 to go there. But the best I could do there was to show you what that would mean. So 5% of 31 million would be 1.5 million. Part E has a similar may be dispersed to the internal flexible account. And again, it's 0.05. So 5% of 31.1 million is 1.5 million again. Parts D and E are May's, so this last number is dependent on if or how much of that happens. But for the sake of simplicity, I just assumed they would both happen, because Part F says that the funds remaining after making the disbursements required in paragraphs A to C and authorized by D and E must be dispersed to the health equity and health improvement account established in subsection 5. So essentially, this remaining money after these disbursements are taken out of our total of 31.1 million is just under 7.3 million. So it's about 23% of that $31 million. Next, I wanted to talk a bit about administrative costs that are identified at different points within this bill. There are a number of them, and the first one is in section 1515, where the Trust for a Healthy Maine Board is established. In subsection 11, it notes expenses reimbursements, and it says that trustees are not entitled to compensation for service on the board, but the trust may reimburse for travel and other board-related expenses. So it's just an expense that now would be borne by the fund. Subsection 1517, in the funding disbursement plan, it notes in subsection 10 that there must be an audit. This was discussed a bit when Doug Kotmar was discussing the controller's office with you. And in the case of this bill, there is specifically the need to do that annual audit by an independent certified public auditor. Subsection 1519, administration, there are a couple of pieces that identify administrative costs. The first one is the actual administration fund. And it says the trust may annually deposit funds authorized to be used for administrative costs under this subchapter into the administration fund. I'll just step back and note that what you see here in Part C in the designated disbursements is essentially the money that is required to go to the administration fund. The board is allowed to send additional funds there, but that's what would be required to go there. It also notes that any interest on funds in this fund must be credited to the administration fund. So any interest stays within this fund and doesn't go back to the overall funds. It does also note that the board may also use administration funds to contract for reasonable professional assistance. That contracting is outside of the work of a coordinator, which is going to be the next piece we talk about. So it's sort of a separate admin cost. In subsection 2, it talks about a coordinator, and it says the board shall appoint a qualified full-time coordinator of the trust. And then it notes what the coordinator's jobs and duties are. So this coordinator will be the full-time overseer of this fund. The board has the ability to contract for other professional assistance when needed. So those are two separate things. Lastly, in subsection 1520D, liability, there are two items that are costs to the fund. The first is bonding, that all officers and trustees, employees of the trust must be bonded. So that's just another cost that will be borne by the fund. The last one is indemnification. Each trustee must be indemnified by the trust against expenses actually and necessarily incurred by the trustee in connection with the defense of any action or proceeding in which the trustee is made a party by reason of being or having been a trustee against any final judgment rendered against the trustee in action or proceeding. I think when I read the bill, all of these costs are expected to be borne by this administration fund. Whether the amount of $93,000 is enough to cover all of this, I don't know. But the fund does have the ability to send more money to the administration fund as needed. But these are all costs that will now be borne by the fund that are not currently borne. These are not costs that they have to directly handle. The last sort of section here that I wanted to talk about were some other notes from the trust bills. The first one is where they talk about non-lapsing funds. So there's a couple of places where this comes up. First, in section 1520E, where the Trust for Healthy Maine is established, it notes the Trust for Healthy Maine Trust Fund is established as a non-lapsing fund. All that means is that the money that's in this account, if it goes unspent, remains in the account. It doesn't go somewhere else. That's the simple explanation of what that non-lapsing means. The other time this is identified is in subsection 1519, the administration. We just talked about the administration fund a bit. This was some other language in there which says any funds unspent in any fiscal year carry forward and remain in the administration fund to be used to defray administrative costs. So that means that that 93,000 that we estimate is going to be sent to the administration fund in that first year, it goes into the administration fund. They do their work during that year. If at the end of the year there's $25,000 left, it doesn't go back to the Fund for Healthy Maine or to the trust account. It stays in the administration fund specifically to be used for future administrative costs. So just something to take note of. The last thing I wanted to talk about is zero-based budgeting, and that's just because it's specifically identified in the bill, and I thought it would be useful for all you to at least hear the explanation of zero-based budgeting that they're required to follow. So in section 1517, the funding disbursement plan, subsection 2, it notes when considering the input of interested parties, the trust must consider principles of zero-based budgeting as defined in Title 35A, Section 102, subsection 25. So with that being the case, here is the language that says what zero-based budgeting is, and it describes it as a method of budgeting in which programs and activities are justified for a budgetary period using cost-benefit analysis without regard to the amount that was budgeted for those programs and activities in a prior budgetary period. What that means is they would handle identifying where to send the money based on where they think the money should go, not based on what the baseline, that's the term we use for that, what the baseline was for a prior year. So just because a program got $2 million last year doesn't mean it starts at $2 million this year and they go from there. It means they look at each individual program on its own this year and figure out how much money to give to it. So it's just it's a way of budgeting. It's a little different from what we tend to do here in the legislature. So one note I want to make sort of overall about this new structure. There's been a lot of talk about the money sort of going to the trust and it's in the trust and what can the legislature do? At any point in time, the legislature can go back and get rid of this particular piece of legislation and eliminate the trust and go back to the old way of doing things. That can happen. Another thing that the legislature can do is at any point in time go and take money from the tobacco settlement funds. They can do that. The legislature still has the purse strings, even though the money is moved to the trust. And I think you sort of heard a little bit of this from Michael when he was talking about the Efficiency Maine Trust. Because what would happen is if the legislature at some point decided, you know, we have something going on that we think the tobacco settlement money would be great for, we're going to go take $5 million of that money and put it into the unappropriated surplus of the general fund so we can use it for item X. The legislature could do that at any time. There would just be some language drafted to say that the trust is required to give that money to the state. And then if I were to, let's just say that was on its own a separate bill, and I'm doing a fiscal note for that, what would be noted is that, well, the trust will now have to do the things they're required to do, but with less money, and they'll have to decide how they're going to fix that. So there would be no deallocation, allocation like you'd see now. There would be no, you wouldn't see the money moving around. All the fiscal note would say is, well, you're taking money from the trust. The trust still has to do what they're required to do, and they'll figure out how to do it with the money they have left. I just think it's important to point that out so that you understand that under this structure, the legislature still holds the purse strings and still has the ability to use that money as they see fit. It doesn't stop that from happening. So questions. These are questions that I answered. Some of these I answered in the previous iteration of this bill, LD 1961 and the 129th. And some of these have come to me since, but I thought they were good questions to just sort of walk through to give a bit of a lay of the land of how things stand. So first one is, what percentage of FHM funding goes to Maine Care and what effect would these bills have on the funding? I think we've talked a bit about the effect it'll have. That's this $57 million of general fund cost. Most of that is Maine Care. That is sort of the impact it would have on the general fund specifically. But I wanted to back up and just show you. So here is the Medicaid spending out of FHM for the last 5 years. You can see as a percent, it's near 50% each year. That's just what it's been. But that only goes back to 2013. to 2014. Prior to that, 2013 back to inception in 2000, the funding going to Medicaid was much lower. It was between 5 and 15% most of the time, with a couple of outliers, but generally it was 5 to 15% for the first many years of the fund. Then in 2014, it rose up to near the 50% level, and it's been there ever since. So that's why now there is this large impact to the general fund. It's because of decisions that were made back in 2014, really, and since then. The next question is, what effect does this have on low-cost drugs for Maine's elderly program? So I think it's important to note that, as we did for Medicaid, the expenses that are being covered by this funding are not going away. They're still going to happen because the Drugs for Maine's elderly program is not being changed in any way by this. It's simply taking one of the funding sources and eliminating it, eliminating a piece of it anyway. So that piece that goes away will now need to be borne by the general fund. That's what we've talked about. But I just want to show you then where we are with Fund for Healthy Maine. With Drugs for Maine's elderly. So it is the entirety of this prescription drugs line. So you can see where the funding has been over the last 5 years, and that funding has been pretty static, except when you go back. The casino revenue has generally been the biggest thing that's changed within this account. It hasn't been the allocation from the legislature. So that is what the expenditures that have been covered by Fund for Healthy Maine have been in the last 5 years, just under $5.5 million the most recent year. So the next question is, where does the remaining Fund for Healthy Maine funding go? I think the thing to talk about here is currently we know exactly where all this money goes. And that's the piece that is least clear in the bill as far as how much of that I'll still know. So again, we'll look at this file because what this does is it gives some idea of exactly where the Fund for Healthy Maine money is going and what it's being used for. If we go back even further to the allocation account, you can actually go through line by line and see exactly how much money goes to different types of programs. I am not sure that that will still be something I can do going forward. And as an employee of the legislature who has to answer legislative questions all the time, that information is really important to me, because not only do I have that information, but I have access to it at any given point in time. And I can tell you exactly how much has been expended from different funds at any given point in time. I can tell you how much revenue has come in. The revenue piece is going to remain. I'm still going to be able to see the revenue the way I see it now. So that's not a problem. But the allocations and expenditures and how that all works, it's not as clear how that's going to pan out in the future. So what I don't know is if I'll be able to outline the expenditures the way I do now, which is a pretty clear document that we use annually to put into our compendium. And I just don't know what the annual reporting is going to look like and whether that annual reporting will give me that kind of information. And I think it's probably good to step back also and think about, so one of the things that we talked about, this was last year, when we were talking about one of the big budget initiatives was a program consolidation, where they were taking a bunch of accounts and trimming them down to 4 accounts here and 3 accounts there. And it was to just take what was a broad bunch of work for the department and trim it down because they had to do a lot of financial orders and budget orders within those accounts. That program consolidation, one of the things that was concerning about it was the idea of, well, but will we still have access to will we still know what we know now? And one of the things that I could tell you then was that, at least from an expenses perspective, I would still know the same information because I could see the same information even though it would be going to a different account. Under this scenario, I don't know what that's going to look like. It's harder because it's not clear exactly where the funding is going to go and how it's going to be broken out. So it's a big question for me in trying to work for the legislature, because I don't know what I'm going to know in the future. So there was also a question of, is there any effect on other programs currently receiving Fund for Healthy Maine funds? This is also a question that it really can't be answered, but I can just explain where problems could arise. Currently, programs are allocated certain amounts from the Fund for Healthy Maine based on what the legislature decided. When the money moves to the trust is going to come up with their own way of deciding where the money goes. That's what the bills allow them to do. If they don't give the same amount of funding to certain programs, and I'm thinking largely of state programs just because that's where I see the money. But if there is a state program that's currently receiving, $500,000 from Fund for Healthy Maine, and when the trust divvies up the money, they only get $250,000. There's a hole there that has to be filled. And this isn't not anywhere near as clear as the Maine Care and Dell pieces, because within these programs, they're going to have to decide what to do. They're going to have to decide, well, okay, we're getting half the funding. Do we cut the program in half? Or is this program too important? We'll take money from a different program to fill it, but now we're cutting that other program. Or are they going to go and ask for general fund dollars? That's a programmatic decision I have no part in, but it's just to understand that is what could happen in the future, because the funding is now identified by the trust instead of the legislature. And so when it's being identified by the legislature, we have those long budget discussions. We sit there and talk about all these different lines. And if you're approaching a line and saying, well, maybe we want to cut that, you might actually hear directly from the department saying why that's maybe not a good idea, and you might change your mind. So those sorts of discussions happen now, and they're just not going to happen because the legislature isn't the one deciding where the money goes. So that could have impacts on programs in the future. This question is less needed after the discussion we've already had today, because the treasurer and controller both sort of went over the technical aspects of the funding, the fact that the money comes into the treasurer, it's sent to, it's in the Fund for Healthy Maine account, and then the controller disperses the funds as outlined by the legislature. So that it's a pretty simple process right now about how the money goes, and I can see all of that activity happening. So the last question I wanted to touch on are just, I've discussed it a little bit. How are these funds identified in the budget for review by the committee? And that's the big question, I think, for you as a committee when thinking about these bills. Currently, you get a budget that includes changes to Fund for Healthy Maine, and you get to talk about all that and work through it. That's not going to happen at all. And in fact, the legislature really has no direct say in where the money goes. As I said before, the legislature can always put in a bill that requires the trust to do a specific thing with their money. That can happen. There could be language in a bill, in a budget, I mean, that also requires them to do that. But it's more indirect in that case, because you're just saying you must do this. They will then move the money around how they see fit. The current structure, the way that we do things, I sit there with you for quite a long time talking about all the different budget items, and these questions come up. Some of the questions get answered, and you decide, okay, this is what we think the funding should be for all the Fund for Healthy Maine accounts. And then eventually that works its way through the FA and you guys vote on it. Without that process, you're just not going to see all those little things the same way. You will get an annual report, and in that annual report, it'll lay out how the money was spent in one way or another. The annual reports can be very different. Some are very detailed, some aren't. Without seeing what the annual report looks like, I don't know what kind of information you'll get. But that annual report will be your way to see how the money got spent in the fund. It'll come that once a year, and you'll have to wait till next year to see what happens from that. So that is the big difference for the committee. So I just want to make sure it's very clear that you know that that's what's happening, so that you understand it. Because when you make this decision one way or the other on this bill, I want to make sure you go in eyes wide open and know what changes there will be for you as a committee. So I think that is all I have. And I am available for any questions you have. And I know there was a lot there, but I thought it was important information for you all to have.
Representative Perry.
Thank you. I have a load of questions, actually, so I'll try to keep it down. Where to begin?
Well, I think what we ought to do is you should feel free to ask a couple of questions.
Okay,
we'll keep going around until everybody gets their questions answered. This is important.
Yes, it is important. And I guess the first thing I am trying to do is to look at the Energy Maine Trust, which sounds like it has a very specific goal. And it doesn't sound like it runs programs. It provides grants for the programs. When I look at the Fund for Healthy Maine, we're talking about paying for programs. And that is, again, negotiating with the state, if the state is going to be running the programs, and money flowing back and forth between the state and the fund. I guess and I don't know who can answer this, but it is a different type of program that this trust will be doing than what the Energy Trust is doing. Am I correct?
I would say yes. You're definitely correct that it's different, and we knew that when saying, but the Efficiency Maine Trust is closest in the perspective of what type of entity it is in relation to the government, and it's different first because they get the money directly. The state doesn't touch the money that goes to the Efficiency Maine Trust. In this case, the state definitely touches it. It comes to the Fund for Healthy Maine and will go to the trust. So there are definite differences, but I think the important thing was just to have a chance to discuss how does that trust work, because there's no perfect example that will match what the FHM Trust is doing. But you're right that there is a difference, that there are programs that the current Fund for Healthy Maine money is used for. This trust is now going to decide how all the money gets spent. Some of those programs are state programs, like you said, so some money will flow back to the state, and other money will go to other entities that they're contract with that will be nowhere on the state books. So currently, we at least see all the money go out. Even when the money's going to those external entities, I know where it went out of which account. And so that gives me some idea of what it's used for. In this new structure, it's hard because I don't know exactly what the accounting is going to look like. That's part of the problem here, is I don't know exactly what it'll be. But it's hard for me to imagine I'll have the same access to that information that I do now. And like I said, as an employee of you, the legislature, it's hard for me because I always like to have more information, not less. Because less information makes it so much harder for me to answer the questions that you have when you're trying to decide what to do.
I think the next question, one other question, sorry about this. And looking at oversight, it sounds like the PUC has some real direct oversight over this trust. And is there an agency besides the legislature that would have direct oversight? And I'm wondering if, like, the head of the CDC or something like that, or should be involved if this is about prevention. And the other question is, the law we have now in the parameters of the trust, is that still in place even with this trust?
When you say the law now, do you mean the current established Fund for Healthy Maine's section 1511 there that we looked at? Is that statute still in? The statute itself is still in place. But if you think about it, now that the money is transferring to the trust, there's the only expenditures essentially that will still be coming out of that fund are as we talked about, for 1 year, the Medicaid expenditures and the drugs to Maine's elderly. The statute will still exist. And that's why, as I noted at the beginning, in the statute, it's now going to have a new language that essentially says, if the Trust for Healthy Maine is repealed, everything comes back to here. And this statute is now the sort of overriding those funds. But there'll be no money other than that small amount of Racino money going to the Fund for Healthy Maine anymore, because it all goes to the trust. But the statute still exists.
We'll get back to you.
And
keep thinking of those questions.
To the first question, though, about if there's any oversight, I'm sort of putting Sam on the spot a little bit, because I've read through the bills and I don't think there is any specific oversight from any agency. Does that sound right to you, Sam?
Yeah, I would agree with that, Luke.
Okay. So I wanted to answer that question as well, Representative Perry.
Representative Connor?
Thank you, Mr. Chair. I didn't know if Representative Stover was ahead of me or not, but if she wanted to go, I'd be more than willing to
We'll
defer.
go around a couple times until all.
Perfect, perfect. Luke, thank you very much. Drinking from a fire hydrant, no doubt, but you dumbed it down to my level, and I greatly appreciate that. You touched on it very briefly. My biggest concern with something like this is that if the tobacco MSA does what it is supposed to do, more and more people throughout the country should be buying less tobacco, which will then in turn reduce the amount of that fund coming to our state year over year, would be our hope, because that means it's doing what it's supposed to do, getting people to stop buying tobacco. How would it look if the fund kept going down, the revenue kept going down, and the programs that need to be funded, you touched on it really quickly, that they would have to ask for general funds to backfill that? How would that process look from the fund or from the board that's overseeing the fund reaching back and asking for additional general funds? What does that process look like, if that's something we could anticipate?
I think it is something we can anticipate, because as when Michael Russo was speaking to you, he talked about how there are times where they give specific money to the Efficiency Main Trust from the general fund, and that money is given to them for, in these cases, it's usually for a very specific purpose. So let's just imagine there is a program that is currently being funded, and the board wants to keep funding it, but the money's gone down and they're not sure they can. They would, I would imagine what they would do is either talk to some legislator to try to get a bill put before the legislature, talk to the governor, try to get something in the budget, whatever it would be. They would in some way ask for an appropriation, and they would probably say, this is for X. This program, we've been funding it for a couple of years, but we don't have the money to do it anymore. We're hoping to get a general fund appropriation to do it. And so then if that were to happen, you would see that bill. There would be a bill. There would be something that would show those dollars being appropriated for that purpose.
So is it more financially prudent to have those programs funded by the general fund from the get-go versus a fund that can ebb and flow throughout the years?
I would say I think that's probably been a discussion that's gone on for years with Fund for Healthy Maine, because I speak about it every time I come before the committee when we're doing the budget. The funding is going down, which I think, to your point, Representative Connor, that's sort of the goal, right? Is you want to see the funds going down because that means the prevention is working. That has been, if you just go back and look at the curve right now, it is definitely on a downward trend. There may have been blips in there, but generally it's been going down. So there is less funding coming in at all times. And so it's a discussion that currently resides with the legislature. I think that's the point I was sort of making at the end there is, right now, as the funding goes down, you, the legislature, sit in a public hearing or a work session and talk about the funding and say, well, what do we want to do? The governor may propose one idea and you, the legislature, decide, we don't like that idea, let's do this instead. But that happens and you get to talk it through. That same sort of discussion is going to have to happen by the board of the trust, right? I mean, they're going to have that discussion if the money keeps going down, but that's their discussion to have, not yours.
Senator Baldacci.
Chairman, Luke, I want to just echo Representative Connor's remarks. Really, we are very fortunate to have your expertise and your hard work and your service. So thank you very much for this and for your work in general. One of the things I mean, essentially what you're saying, there's a couple of points I want to make. One is essentially what you're saying is that whatever we call it, whatever, a duck is still a duck. It's still going to be reviewable by the legislature, regardless of what we call it. Basically a revocable trust, if you will, but it doesn't matter what we call it. It's always going to be reviewable by the legislature.
Yeah, and I don't want to get into the legalese only because I might use the wrong term. But what I will say is when we talk about what this is, it's more of a public instrumentality is the term we keep using. That's just when we discuss it, because essentially the legislature cannot create a trust where you have no access to that money. It's unconstitutional, right? So that can't be created. So no matter what name is given to this thing, the legislature is still going to have the ability to go back and change things. You're going to
Right.
have the ability to get to that money if you want to. That can't be taken away just because it's unconstitutional. That's the bare bones legalese that I know about it, and so I'll
Oh, no,
stop there.
I think that's the first essential point that I think everybody needs to be aware of. The second one, though, is that there are mechanisms where this work is being done by quasi-independent agencies. I mean, I'm not talking about public health, but we have examples of quasi-independent agencies such as the Turnpike. I'm looking at the Turnpike statute. So what happens is that the appropriation goes directly to the legislature, and it doesn't go through the executive. That's the way I read. I'm sure but it goes from a board to the legislature. The legislature has to review the Turnpike statute, for instance. The legislature is allowed to set up quasi-independent agencies. Correct?
That's correct. But I'm not a lawyer. I don't play one on TV either. So I don't want to get into the specifics of that. I just know that from the discussions I've had, it's essentially important for the legislature to know they cannot set the money aside in such a way that they have no access to it. And I think under the scenario you're discussing, there is a process where the money comes through the budget, but it's provided directly by this quasi-independent agency and approved by the legislature as is. Right. But the legislature still could put bills or make changes in language that would require either this quasi-independent agency to do something different, or they can, I am again guessing a little bit here because I'm not positive on this point, but I believe they still have access to the money. They can still go take money from that agency if they want to, because the legislature can't give up that ability to hold the purse strings.
Or the legislature could at any time repeal the statute that creates the Turnpike Authority in general.
Yes.
So, I mean, yeah, I think we come back to the same point, but the procedure is a little bit different. There's more independence with a director that's not just appointed, that's responsible to a board and the rest of it. That's all I'm trying to say. But I think your essential point is clear that whatever we call it, the legislature still has control.
Yes.
So it's really from there, we need to proceed from that point forward. But I appreciate your work and thank you very much.
I'll just point out a thank you to AAG Elizabeth Reardon, because she gave me a big thumbs up, so I didn't say anything wrong there. So that's good.
That's a lawyer's opinion. So to follow up on Senator Baldacci's point about the legislature still having the option to, or the ability to review how this is done, what I heard you say, it would just be a little more challenging because you wouldn't have as ready access to disbursements. Okay.
Exactly. Because of the way the activity currently is in the accounting system, I can go in and see anything today about what has been spent so far. And I also know exactly what the allocations are at this point in time. I can always know that. Under this structure, I don't know that I'm going to have the ability to know all that information. So it's just, as I said, going to make my job a lot harder in helping you, the legislature, make decisions. That's the part that is very important to me, because data and information is so important to what I do.
Okay. I don't see any hands up, so I'll go back to Representative Perry and she can ask her next two questions.
Yeah, my some of my question is, and maybe this I need to know a little bit more about. I thought the Racino money was put in specifically for the Dell program, and that was a piece of why. So if the Dell program gets out of the Fund for Healthy Maine, wouldn't the Racino money have to follow it?
It can't follow it, because that money is specifically identified to go into the Fund for a Healthy Maine that was established by the legislature. So that I guess the way to explain it is, could it could, if this bill changed the statute that relates to that funding over in the Gambling Control Board. There could be language there to identify that the money goes to the Fund for Healthy Maine Trust, but there would have to be additional language. As it currently sits, this bill, it could not follow it. That money would remain in the Fund for Healthy Maine. And that's why that allocation stays there. And that portion of those Dell costs would still be covered straight out of the Fund for Healthy Maine.
So it would have to happen that way. Is that what you're saying?
It would have to under the current language, yes.
And under what it's doing right now.
Yep.
Okay. And in terms of programs that they're paying for right now, and I'm thinking of school-based health clinics and some of the Head Start stuff, which are not necessarily federally funded matches on programs. Going into, there's no commitment. I guess the question is, there's no commitment that says if that goes into the baseline of the general fund, there's no commitment that the trust will be paying for those programs.
So what you're saying is if those particular accounts, we'll use Head Start as an example, just because then we can talk about one. So in the Head Start account, there's a pot of money right now that is Fund for Healthy Maine money that goes to Head Start. And what you're saying is if that pot was moved to the general fund, deallocated from Fund for Healthy Maine and given as an appropriation in the general fund, and a bill like that were to pass, that new funding that's in the general fund is now covering what used to be covered by Fund for Healthy Maine. And that, as long as that funding is put in as an ongoing appropriation, it would then be there and as part of the baseline in ongoing years. And so that money would essentially be transferred from one place to another. The program would still be getting the money. It now just comes from the general fund instead of Fund for Healthy Maine.
Okay, my question is, because it's an added expenditure out of the general fund, there's no guarantee that the general fund will choose to pick up the amount that the Fund for Healthy Maine has been covering.
Yes, that's always the case, right? I mean, at any point in time, that amount could be taken away. Yeah.
Oh, thank you.
As a counterpoint to that, though, as we receive less money into the Fund for Healthy Maine, the amount that we'll have to spend will go down for other accounts. We don't know what it's going to do for the Racino money because that's somewhat unpredictable. Okay.
Yeah, and I think to your point, Senator Claxton, I think what I would say there is in both of those scenarios, the legislature would be making the decision, right? Because if the money stays in Fund for Healthy Maine and things are as they are now, if in the future, as funding goes down, there was a decision to deallocate the money from Head Start. I'm just using it as an example. I'm not out to get Head Start. If that money was deallocated, you made the decision as the legislature that we just don't have the money. We're going to deallocate from that line. It would be in front of the legislature. You would vote for it, and that's how it would happen. If the money's moved to general fund, the same thing would essentially be true, which is the money would go to the general fund. And if at some point in time it were deemed we don't have the money for that anymore, and there was a deappropriation, you, the legislature, would see that and decide whether to vote for it or not. So either of those scenarios, you, the legislature, at least the ones sort of seeing it and deciding, and you wouldn't not know it happened, if that makes sense.
Before we go to Representative Stover, I see that the bill sponsor has a hand up. So I'm going to bring her into the panel here and see what the question is. And then we'll go to Representative Stover and see if there's other questions to be answered. She's in the wormhole now. She's supposed to be on her way. The wormhole is working slowly today. There she is. Welcome, Representative Millette. Did you have a comment or question you want to share with your hand raised? When you come off mute.
Wow, that was the longest 60 seconds ever.
Well, we're glad you survived the wormhole.
I did. Thank you so much, Senator, for recognizing my raised hand. I think at some point I'm actually going to appear. Oh, here I am.
Here you are.
Yes, I just there are a couple of things I just wanted to make sure we're clear. That is, from my understanding, part of the drugs for elderly does remain in the Fund for Healthy Maine along with the Racino funds. Okay, so I just want to make sure that as proposed, it stays there with the Racino funds. We're not messing with that. In terms of reporting, the bill also is very specific about that. The disbursements will be reported including the identification of the recipients, the activities that were funded, as well as the amount dispersed, and, as from my mind, very importantly, outcomes and results, which I think we all are aware, the kind of information we get as a committee in our policy areas does not often specifically outline that. So for me, that's actually a step forward. Section 15, proposed 1520-A specifically says the legislature has oversight of the trust. And then finally, I think that Senator Claxton, you said it right before I went into the wormhole, but I think it does bear repeating that currently there is no commitment from year to year in the funding of Head Start in the Fund for Healthy Maine. It does depend on how much money we have there, just as it would depend on how much money is in the general fund. So I'm a huge proponent of Head Start, but I feel very comfortable with the proposed changes that I've made both in the bill itself and the amendment. And I very much appreciate the opportunity just to kind of jump in at this point to provide a little bit of clarity in my understanding of the bill. Thank you.
Thank you. Luke, to go back to Representative Millet's first point about the Racino money coming to the fund. I didn't do the math quickly enough, but it looks like it's about 60% of what's currently funded. And the other 40% would then have to go to the general fund.
It might be close. I think it's close. It might be closer to 50-50, but it's somewhere in that range, 50-50.
Like I said, I didn't do the math fast enough, but it's ballpark. So there is some percentage more than 50% that stays with the fund as it exists now, and the rest of it would have to move to general fund. Okay, I just want to be clear about that. Thank you. Are there other questions from the committee? Well, I think what we'll do then is, as long as we're here and learning, I'll bring in one more panelist who has a question. And in the meantime, I see Representative Meyer. Do you want to go ahead and ask your question now?
Thank you, Mr. Chair. I was going to ask that you bring Carol Kelly in, please.
She's in the wormhole, so good luck.
Thanks.
Oh, she made it. I've been trying. Welcome, Carol Kelly.
Thank you so much, Senator Claxton and committee members. I really appreciate the opportunity to just add a little bit more detail to this. There's some key pieces of the design of this trust that we've obviously been working on for many years now, and in the hopes that ultimately create something that is really hand in glove with the legislative process. That is the intent, and I think we've come fairly close. So I want to make sure that it's really, really clear that there are two reports. One is a look back type report, which is referenced on page 10 of the bill. But the more important piece that I think isn't being covered here is the look ahead. It's the forecast. It's the funding disbursement plan. It's the very specific elements of how much money, where's it going, what's it going to be used for. And that has to be delivered in your hands by December 31st of every year, so that you can then take that and build upon it. You will always know what the trustees intend to fund, so that then you will have that information to build from there. And so I just think it's a key piece, a missing piece of this puzzle. I would hope to think that what we're trying to create is something that Luke and his team and Sam have all the information that they need. The last thing we're trying to do, and I think we are doing, is making anybody's job harder, because we want this to work hand in glove. So sequencing is a really key piece of the puzzle. And so that funding disbursement plan is produced every year before the legislature reconvenes. So I just want to make that really clear. I also appreciated that Representative Millett pointed out that the HHS committee, that your committee is the oversight group. It's not, that's the parallel to the PUC in this version. So that's the oversight body, which shows up on page 11 of the bill. Let me just, if you're trying to follow along, the funding disbursement plan shows up on the very top of page 7 and lays that out. The other report, the look back report, shows up on page 10, and then the oversight by this committee is on page 11. I think that what is also important that Representative Perry raised about Dell in the amendment, which I know you're going to be looking at in the next work session, there's a very clear solution to this problem, and it does involve retaining the Racino portion of Dell does stay in the Fund for Healthy Maine. But the transfer that happens in the amendment, the subsequent amendment that Representative Millett introduced in the public hearing, will resolve these other financial issues as best as possible, given that we have, and I think was not directly said as well, a $20 million structural deficit starting in the next biennium. So the fiscal note of doing nothing, if this is a thing you're allowed to say, the fiscal note of doing nothing is $20 million. We have a $55 million baseline and a $35 million projected revenue. So the fiscal note of doing nothing is 20 million. And we need to compare that apples and apples with the solution, which I think you all will see with the amendment actually might even make that a little bit better, because the trustees will then be responsible for fully funding the tobacco program, which currently is partly paid for out of the general fund. I appreciate your time. I won't keep going on and on. I will just say that this is a bill that is so forward thinking and just a dream that we could only have imagined a few years back, that we could actually convert the tobacco settlement, restructure it in a way that modernizes it and gives us all a chance, including our kids, to have a healthier future. So I really, really can't say enough appreciation for you considering it today and all the time you're putting in. Thank you.
Luke, are you comfortable with the characterization of the $20 million structural deficit? Do you want some time to think about it and bring your thoughts to that work session?
No, I think what I would say there is, so all these numbers are up in the air, right? Because one, our starting point is an estimate. And so we know that going in. These allocations, it's looked like multiple times over the last few years that we were going to have to start cutting things here and there. And it hasn't quite happened yet, because every year there's not all the money gets spent. It goes back into the fund. And so I think you can't just say directly it's $20 million, because we don't know what it's going to be. We know that there is an issue coming, because there's no doubt that the amount of money coming in is going down. So there is something coming, and that is, we've talked about that multiple times when we've met about this at budget times. But what that amount is, we don't know. So that's why whenever we do something like this, in the case of this fiscal note, there is, as I said, as it's currently drafted, there really isn't even a fiscal note, because it's just going to be language. We're not going to have any dollars really outlined on it necessarily, because everything starts in state fiscal year 24. But when we do fiscal notes, we do things based on what we know now, and what we know is only so much. So it's a complicated thing to outline. I think the fact of the cost to the general fund is the clearest thing we have, because if that money is not coming from Fund for Healthy Maine anymore, it is definitively a cost to the general fund. That's the one thing we know clearest from all of this, because that there's no wiggle room there. Those expenditures are going to keep coming in, and they're going to have to be funded somehow. So that's the one thing that we know clearly.
Thank you for that. Are there any other questions from the committee while my dog barks in the background? I'm not seeing anything. So I want to thank the sponsor for being here and joining us. I know Carol's been here through the whole process too. But Luke, as always, it's enlightening when you sit down with us and help us walk through a complicated thing. So thank you for that. That being the case, is there other stuff on the agenda, Sam, that I should know about? That being the case, I think we should again acknowledge that Sam did a bunch of work to bring the right people to this conversation this morning and help us sort out that this is the first of 2 work sessions. And I would hate to then break for lunch and come back to finish this work, because I think there's still some questions to be answered, some things to be sorted out, and we haven't seen his analysis yet. So thank you, Sam. Thank you, thank you, thank you.
And if folks have questions that you think of before we do have the second work section, please do send them to me so I can work on compiling some detailed answers in advance.
So thank you again, Luke. And I'll entertain a motion to adjourn until next week. Have a good day off.
I second that.
That would be my dog.
The dog second the motion as well.